So okay, let's start with chapter 1. Okay, the revision of chapter 1, accounting fundamentals. Okay, so first thing we discuss about your accounting fundamentals, the important parts of course is your accounting principles, concepts and conventions, right? So we read a lot about it. So yeah, so first concept that we had read is entity concept. What is entity concept? Entity concept means, for the purpose of accounting, we treat the entity and the owner as two different people. That means even if there is any transaction happening between entity and the owner, that also will be recorded in the books of accounts. Generally, when you see sole proprietorship, all of us, we think that business and owner is one single person, correct? No, but for the purpose of accounting, you have to treat the owner and the entity as two different purposes as per the entity concept. So one example of treating them different is, see, if whenever money is contributed to the business by the owner, then we treat it as a transaction. We pass from journal entry, cash account debit to capital. Why do we pass? Because we are considering them as two different people, correct? No, if owner withdraws any money from the business, even then what will happen? If he withdraws any money, that is also recorded. Drawings account debit to cash, or if he withdraws goods, then drawings account debit to purchases. We pass this entry, no? Yes or no? We pass this entry. Why are we passing? Because of the entity concept. Because we treat entity and owner as two different people as per the entity concept. Then we learned going concern concept. What is going concern concept? If nothing abnormal happens, no, then our assumption is that the business will run until the foreseeable future. The business will run until the foreseeable future unless something abnormal or crazy happens in between. No, my understanding is that with this pace, the business will run till the foreseeable future, infinity. That is my understanding. So your accounting, your assumption also as an accountant should be same. So that's going concern concept. Then we have periodicity concept. What do we learn in periodicity concept? Whenever we are preparing accounts, we prepare it for a particular period. Just because your business is going concern, will you wait till the end of the term? Will end of the business, let the business get over, let the business get over. Then I will record all the entries. Hey, no. We are preparing financial statements for every 1 year generally, no, for a financial year, which is April to March. If you are a listed company, then you are preparing your accounts every quarter, like that. As per periodicity concept, the transactions are recorded for the financials are prepared for a particular period. Then we have money measurement concept. What did we learn in money measurement concept? Anything which can be measured in terms of money only can come into the books of accounts. If you are unable to measure something in terms of money, then you cannot bring it to books of accounts. For example, if you are our student, you'll be knowing the example that we had used in our classes, loyalty. Loyalty of an employee can be recorded. No, not possible, because loyalty cannot be measured in terms of money, though it is a asset to the company. Then we have one of the very most important concepts, that is accrual concept. What did we learn in accrual concept? It is, if you have any income or if you have any expenses, income you will record it when you have earned the income, and not whether you have received it or you have not received it. That is not the question here. Irrespective of whether you have received cash or not, you will record income the moment you have earned it. Similarly, expenses also, you will book it as an expense the moment you have incurred it. You have used the service, you have used the goods. The moment you have incurred it, you will record it as expense. You don't care about whether you have paid the cash or not paid the cash or no. Cash is not the question at all here. What is the question? Whether in case of income, whether have I earned it or then I will book it. Yes. Sir, but I have not received the money. It's okay. Have you earned it? Yes. Then book the income. If I am a seller of goods, when will I earn the income? I will earn the income when I have sold the goods, when I have transferred the title in the goods, when I have delivered the goods, when I have given the possession. The moment I have given the possession, the moment I have transferred the risk and reward, what happened? I have done my job. I have earned that money. Now, whether he has given or not, I don't care. I will record the sales. I will record the income, because we are following accrual basis of accounting. Correct? No. Similarly, with respect to expense also, I have used the premises. Say suppose that we are talking about rental expense. I have used the premises for 2 or 3 months, but I have not paid. But will I still book it? Yes, because I have incurred it. Even if I have not paid, I don't care. I will incur it. That is what is your accrual concept. Then we came to Dual aspect concept. What is dual aspect concept? It's nothing but your double entry system of accounting also. What they tell. Whenever a transaction happens, it will affect any two aspects is what they are telling. Whenever a transaction happens, it affects any two aspects. When I say aspects, what you are understanding? When I say aspects, in accounting we have 5 aspects: assets, expense, income, liability and capital. Correct? No, asset, liability, income, expense and capital. These are the 5 aspects. Now they are telling in dual aspect concept, whenever a transaction happens, no, it will somehow give the effect twice. Okay, that's what your double entry system of accounting also will tell. That is what dual aspect concept is also telling. What is it telling? That whenever there is a transaction, it will affect 2 items, any 2 items. But 2 times it should affect. That's why we have journal entry, 1 debit, 1 credit minimum. 1 debit and 1 credit will be there. Why? It's because of dual aspect concept. It's because of we are following double entry system of bookkeeping. That is what they are telling in dual aspect. Okay. Then we have matching concept. What are they trying to tell in matching concept? They are telling whenever you are an accountant, no, say suppose you are an accountant. So whenever you go to office as an accountant, you have to match with whatever the other girl who is sitting in the next bench is wearing. No, you as an accountant should match with her clothes. Okay, that's called matching concept. Understood? Hey, nonsense fellows. It's not that. Okay. Matching concept is what? Matching concept is, in your P&L, credit side income will come, debit side expenses will come. They are telling when you record an income for a particular period, that the expense whatever you are charging with respect to that income should match. Okay, that is what they are telling in matching concept. One brilliant way for us to understand matching concept is with the below example. What did we learn in matching concept? Your respective income should match with your respective expense. So with this, we'll understand one important thing also. Okay, I know it's a revision video, but this one thing is very important for us to understand. Okay, so see this example. Generally, we discuss a little deeply whenever we are doing the in-depth classes, but however, we should not forget right now we are in revision sessions. Okay, say suppose you have purchased 5 mobile phones, and each mobile phone you have purchased at 1,000 each. So your total purchases becomes 5,000. Good. Then you sold 3 mobile phones at 2,000 rupees each. Your total sales became 6,000. Your total purchase is 5. Your total sales 6,000. So what is your profit? 1,000. 6 minus 5. Profit is 1,000. All of you, please comment. I will see the answers. Is my answer correct? Profit 1,000. Can I go to the next concept? Something is missing now. What is missing? Sir, we have bought 5, but we have sold only 3. No, sir. We still have 2 mobile phones in the closing stock. So we have still 2 mobile phones in the closing stock, no sir. How are you comparing the sales of 5 mobile phones with the cost of only 3 mobile phones? How are you doing it? Not possible. Correct? No. The sales of, I told Luta. The sales of 3 mobile phones should be compared with the cost of 3 mobile phones. Correct? No. How are you comparing the sales of 3 mobile phones with the cost of 5 mobile phones? That is what I am doing here. Wrong. Since I have sold only 3 mobile phones. What is the cost of 3 mobile phones? 1,000 rupees each, and the cost becomes 3,000, whereas the sale of 3 mobile phones is 6,000. So actual correct profit is 3,000 and not 1,000. Correct? No. Why did we make this correction? This correction we are making because of matching concept. Because I told you the income should match with the expense. Here I have sold 3 mobile phones, and I should compare it with cost of also 3 mobile phones. Correct? No? That's why in your trading account closing stock comes. Why? To make this matching concept correction, or else you'll be comparing wrongly like this, sales of some units with purchase of some other units. And next we have realization concept. What did we learn in realization concept? That you have to recognize something as a income only when the income is realized. Okay, that means what they are emphasizing is notional profits should not be booked. That's what they emphasize. Profits which have been realized and which has come in cash, or which will pakka come in future. Pakka. Any money which is realized in cash, and it is converted into cash. You have received the cash with respect to some transaction. Only then you are supposed to record it as income. Is what the realization concept is telling. Okay. Of course, there is now many things has changed. Accounting standards has come. Now we also recognize notional income with respect to PPE, correct? No? We record revaluation gain and all, correct? No. You should not forget that revaluation gain is a notional profit only. So these were the concepts which were there much before. So we are learning it. It was gap. That's how these were the earlier understandings. Okay. So that's why we are learning this concept. Right now it has changed a little bit. Realization is telling only if you realize in cash, you are supposed to book it, or else don't book anta. Of course. We no more follow that concept, correct? Next we have cost concept. What did they tell in cost concept? They told all the assets should be maintained at historical cost only. They want us to maintain all the assets at historical cost. And you have to recognize it at historical cost and maintain in the books at historical cost is what they are telling as per cost concept. And whenever a transaction happens, it should be recorded at cost is what they are telling. Okay, that is as per cost concept. Then we learned, some more we have, okay. Then after cost concept, one more concept, what did we learn? We learned materiality concept, correct? No, what is materiality concept? What is material first of all? Material means it is any information, from which the decision of the users of the financial statements will change. Just to tell it in simple Kannada, material information andre, ಏನು information andre, by giving this, if you give this information to the stakeholders, no, and the information you ಕೊಟ್ಟಿದ ತಕ್ಷಣ, it is so influential that it will change the decisions of the stakeholders. Andre, it is so important information that once the stakeholders listen to it, no, they will change their decisions. So it's a material information. So they are telling you there is any important material information which can change the decision of the stakeholders, you should disclose it because people should know. Okay. How to decide whether something is material or immaterial? Generally for materiality we have quantitative threshold. Just because we have quantitative threshold doesn't mean it is not judged qualitatively. For example, now some theft happened. 50 rupees theft happened in a business. Okay, should I disclose it? 50 rupees. Of course, the sales is 500 crores of that company. But 50 rupees theft happened. Should I disclose it separately? No. Why? Because it's very immaterial. What? The decision making of the stakeholders will change because of 50 rupees. No. So I will consider it as immaterial. Okay, but if it is 50 lakhs, of course it should be disclosed. Now this was quantitative threshold as to decide whether something is immaterial or material. Yes or no? But should it be only quantitative always? Nothing like that. It can be both quantitative and qualitative. Qualitative means, say suppose, now the turnover of the company is 500 crore and the director of the company, who is supposed to be the brains of the company, shareholders have believed directors for running the business. Shareholders have put their hard-earned money and director is managing the money in a way. He is the brains of the company. No? Now this director, what he did, he tried to make a profit of, illegal profit, okay, not in a correct manner, from the company of how much? Say 5 lakhs. Okay, director tried to make illegal profit of 5 lakhs in the company. Okay, now if you see 500 crores is the turnover, then 5 lakhs is actually immaterial only. Okay, comparing to 500 crores, 5 lakhs is immaterial only, no doubt. But am I judging it from quantitative point of view now? No. I am judging it from qualitative. It's not about the 5 lakhs here. It is about the intention that the director has. Hey bro, I've given my money to you. Okay, I've put my hard-earned savings in your company and you are thinking of, stealing that money only. Hey, your intention is not correct. Today you are taking 5 lakhs. I can forgive you, but tomorrow you will take 500 lakhs, then I don't want that to happen. So I don't want to believe you. I'll do one thing. I came to know about your intention. No, I will sell all the shares is what they decide. Now even though the 5 lakhs was very immaterial, will that affect the decision making of the users? Of course yes. Now this I have to disclose it in the financial statements. See here, the threshold was not quantitative. It was 5 lakhs. It was still immaterial. But here intent of the director's intent to steal money from the company was wrong, and that changed the decision making. That might change the decision making of the users. So here, that I will consider as a material information from qualitative point of view. So no matter what it is, any material information should be disclosed in financial statements. What is material? Any information that influences the decision making of the users is called material. Material information which should be disclosed. Okay. Then what did we, any other concept? Then let's come to conventions. Okay, what are conventions? The first one is convention of conservatism. What is conservatism? So conservatism convention is telling us that if there is any foreseeable loss, book it today only. It's okay. If there is any foreseeable loss in the future, book it today only. But if there is any foreseeable income, then don't book it. Be conservative while you are doing your accounting. So you understand the intention, no? Okay. If tomorrow's profit, even if you have not told to the shareholders, it's okay. Let them know when it comes. That is not causing any harm. But if there is any future loss, then shareholders should know it now only, so that they can take the right decision. Correct? No, that's what they are telling. They are being conservative. See, ನಾಳೆ ದಿನ ದುಡ್ಡು ಜಾಸ್ತಿ ಬಂತು ಅನ್ನೋದು ಪ್ರಾಬ್ಲಮ್ ಆಗಲ್ಲ ಯಾರಿಗೂ. ಕರೆಕ್ಟಾ? ಅಯ್ಯೋ ಲಾಸ್ ಆಗೋಯ್ತಲ್ಲ ಪೋ ಅನ್ನೋದು ಪ್ರಾಬ್ಲಮ್ ಆಗೋದು. ಸೊ ಅದಕ್ಕೆ ಮುಂದೆ ಏನಾದ್ರು ಲಾಸ್ ಇದ್ರೆ ಟೆಲ್ ಇಟ್ ಟುಡೇ. ಬಟ್ ಮುಂದೆ ಏನಾದ್ರು ಪ್ರಾಫಿಟ್ಸ್ ಇದ್ರೆ don't book it today. But if there is any losses in the future, book it today. That is what they are telling in conservatism convention. Then we had consistency. What did we learn in consistency? While applying many accounting principles, while applying accounting itself, we follow various methods. These various methods to apply accounting is called accounting policy. We have various methods. We can choose whichever method we want to do the accounting. Correct? No? Now, one of the major usage of financial statements, or one of the major characteristics of the financial statements is, it is comparability. All of you should understand. What is comparability? Once you prepare financial statements, balance sheet and P&L, it is used for comparing. Okay, to compare what? It is used either to compare your financials or your performance with other companies in the market, or it is used to compare your performance with the previous year's performance. Andre, use your financial statements to compare among other competitors, or use your financials to compare your previous year performance. No matter what, you are using financial statements for comparing. No, so one of the features of financial statements is it is comparability. Now say suppose when I am comparing financial statements with previous year's financials, every year if you have applied the same accounting policy, same accounting methods every year, then the financials will be comparable with previous years also, because they have prepared it with same principles, same policies. Imagine one year you are putting one policy. For example, let's take inventory valuation. We have various methods now, FIFO, LIFO, WM. One year they have done FIFO. Another year they have done WM. This year they are doing something else. Now one year you have used one method for inventory valuation means, do you think it will be comparable, these financials of previous years? No. Why? Because they are not using same accounting policy. So what they are telling in consistency is, try to apply the same accounting policies every year. Try to be consistent with respect to accounting policy every year. Okay, like you are consistent with whom? Like your everyday, over the call, consistent, no? Like that, even accounts is telling, while applying accounting policies, you should be consistent every year. Okay, then the financials will be comparable. Okay. Then we have convention of full disclosure. That means all the information should be disclosed. Okay, you cannot leave incomplete information. Then we have, what else? We have one more convention now. Convention of full disclosure and convention of full materiality. Then we had convention of materiality is next one. Correct? No? The convention of materiality is very, very similar to the materiality concept that we read. Okay, all the material information, facts, transactions should be disclosed to the should be disclosed in the financial statements. Okay, so that people can take appropriate decisions. That is what you understand. Okay, so if you understood the concepts, okay, one thing about realization concept, what I would like to tell is, okay, what did we understand in realization concept? That you have to recognize something as income only if it is realized. When I say realized, I remember saying that you recognize something as income only if you have realized it in cash anta. So I don't mean literal cash. Okay, when will I realize something as income? Only when there is certainty. So only when the income is realized, then you can recognize it as income. When I say realized, either if the money has come in cash, then recognize the income, no doubt, because the income has already reached your hands. One more thing is, say suppose you're delivering goods, okay, you're seller of goods. Now the moment you transfer risk and reward in the goods, now you are eligible to receive money, correct? Alva? That means the income is realized. You can record that, okay, without even supplying the goods. You're already recording the income. No, that you are not supposed to, because income is not realized only. At least if I have transferred the goods, I have earned the income, that is realized, I will book it. Or if I have realized the cash itself, then yeah, I've got the cash itself, I will record it as income. Okay, again, don't forget about accrual concept. Now, cash received in advance cannot be recognized as income, no, because you have not given the service or you have not transferred the goods, you have not earned it only, correct? Now, in that case, advance received from customers will be a liability, okay, because you have not given the service. So, basically what they are telling is, if you are asking money, you should be eligible for it, then you recognize the income. You have transferred the goods, then you are eligible, you can book it. Or you have already received the money in cash and you have also transferred the goods, both have happened, then of course, book the income is what realization concept told. Okay, done. Now, let's come to the second part of your accounting fundamentals chapter, that is classifying transaction as capital or revenue. Okay, three things we read here. It's capital expenditure, revenue expenditure. Capital receipt, revenue receipt. Then we read capital profit, revenue profit, or loss, same thing. Okay, now how to do this? Okay, first let's understand about the capital expenditure and capital and revenue expenditure. Before that, see, whatever I call as capital, no, so what you have to understand is, whenever I call something as capital, no, be it capital receipt, capital payment, or capital profit, whatever it is, capital loss, this will affect balance sheet. Whenever I say something as capital, it will affect balance sheet. Okay, whenever I say something as revenue, let's talk about expenditure only. Capital expenditure will affect balance sheet items, whereas revenue expenditures will affect P&L items. Simple. You know what will come in P&L? Income and expense will come in P&L, correct? No, and assets, liabilities or capital will come in balance sheet. So capital items generally affect these, and revenue items will affect P&L, correct? That is one basic thing you should know. Now let's understand the difference between capital expenditure and revenue expenditure. Okay, how to determine whether something has capital expenditure or revenue expenditure? So let's see this. Okay, so please note it. First, we are learning about capital expenditure. First criteria is, okay, just to keep it very simple, if you are expending or if you are spending any money on fixed assets, generally will be considered as capital expenditure and it will directly go to balance sheet as an asset. Okay, anything that you are paying towards normal expenses of an entity like rent, salary, etc. will become revenue expenditure. It's a very broad classification. Okay, that is one basic. Anything you are spending on fixed assets, PPE, that will be capital expenditure. Anything that you are spending normally, which is generally recurring in nature, repetitive, like rent, salary, you pay them every month, no? So they are revenue expenditure. Now some conditions that we use to classify it as capital expenditure or revenue expenditure is, one thing is, now you say, suppose you spend some money, whatever, the moment you spend some money, it will be considered as expenditure. Now from this expenditure, of course, you should get some kind of economic benefits now, or else why are you spending it? Or else that money would have become loss. Correct? If you spend some money and if you are not getting any economic benefits, that is loss. When you spend money, some benefit you will get. If you pay rent, you are getting space to use. If you are paying salaries, you are getting services from the employees. Correct? No? Now, the benefits that you get from a particular expenditure, if it is less than 1 year, no, it will be considered as revenue expenditure. If it is more than 1 year, then it will be considered as capital expenditure. Understood? This is one way. The economic, we are talking about the economic benefits. If the economic benefits is less than 1 year, revenue expenditure. If the economic benefits is more than 1 year, then it will be capital expenditure. Okay. Then any money that you spend on PP for acquisition of fixed assets or acquisition of property, plant and equipment. Acquisition and purchase. Anything you have spent on purchase of PP will be considered as capital expenditure. Anything that you have spent on construction of PP, same thing. Construction, acquisition, purchase of PP will be treated as capital expenditure. Alright, okay. Then what else will be treated as capital expenditure? Then one more indicator of capital or revenue expenditure, it's just an indicator. Revenue expenditure will generally be recurring. For example, now say suppose you take rent. Rent is what? The benefit that you get from rent payments is generally less than 1 year because you generally pay rent for 1 month. So that will go to P&L. It will be considered as a revenue expense. It will go to P&L. And I told you, now rent became a revenue expense and it is generally recurring in nature. That means it is repetitive in nature. If you see capital expenditure, it will generally be non-recurring. That means it will not be repetitive in nature. For example, I told purchase of fixed assets or PP is a capital expenditure. What every time you purchase, every month you purchase, no. Generally there will be huge intervals between purchase of one fixed asset and another fixed asset. So it is not recurring, it's non-recurring, it happens. The frequency of the transaction is very less. So capital expenditures are generally non-recurring, whereas revenue expenditures are very much recurring. Correct? No? Then what else is called as capital expenditure? Then with respect to PPE only, okay, there is something called as subsequent expenditure. What is subsequent expenditure? That is the money that you have spent on an existing PPE. Here it was what? Here it is acquisition of a new PPE. Now we are talking about subsequent expenditure. Now, before coming to subsequent expenditure, I would like to add one more point to acquisition. Now say suppose I am buying a furniture which is costing 5,000 rupees. What is this expenditure? Since you are spending it on an acquisition of fixed asset, it will be treated as capital expenditure. Now, one more thing is, along with this acquisition cost, if you have incurred any associated costs, which is directly attributable for acquisition of asset, will also be treated as capital expenditure as per AS10. What is this associated cost, sir? Associated cost which is directly attributable for acquisition of asset until the asset becomes ready to use. Okay, just to take a good example. Now say suppose I've taken a plant and machinery. Plant and machinery is a PPE. Whatever you have spent, whatever money you have spent on that will be considered as a capital expenditure. Maybe some 5,000 rupees you have paid for wages. Some 10,000 rupees you have paid for transporting the asset from the supplier's place to your place. Some other 2,000 you have paid for other laborers to set up some, before placing the plant and machinery, we will set up the place. Correct? Now we'll put one foundation, something like that. Then we will set up the plant and machinery. Now all that is directly attributable to the acquisition of the asset. Yes. Correct? No? All these are directly attributable. Sir, till what point I should consider it as directly attributable? First of all, it should be directly attributable. Okay, and then that expense you should be incurring only for the purpose of acquiring the asset. That means if you had not acquired the asset, you would have not incurred that expense. Till what point, sir? Till the asset becomes ready to use. The moment it is ready to use, then whatever you are incurring will not be considered as capital expenditure. Until it becomes ready to use, whatever you spend, and if those expenses are directly attributable, then it will be treated as capital expenditure. Correct? No? So that also will be added. That also will be considered as associated cost and will be considered as capital expenditure. Okay, that is about acquisition. What all you consider as capital expenditure? Whatever you have spent on acquisition plus any associated cost that you have incurred on the acquisition till the asset becomes ready to use. Please note this points. Then we have something called as subsequent expenditure. Okay, what is subsequent expenditure? It is the money spent on the asset, not the newly acquired asset. It is the money spent on the asset that was already acquired before. What it is? It's money spent on an existing asset which was already acquired before. Now, sir, will that be treated as capital expenditure? No. For that, one condition. The condition is, if the money that you have spent on an existing asset, if it increases the efficiency, then it is considered as capital expenditure. If it does not increase efficiency, then it will be treated as revenue expenditure. Okay. Sir, efficiency and revenue. Efficiency means, okay, increase in performance of the asset. The performance of the asset will increase in some kind of benefit I should have. For example, I have my vehicle Suzuki Access 125. Now spent, it's my existing asset. I spent 5,000 rupees just for the general service. By doing general service, what the efficiency of the asset will increase? No. By doing general service, efficiency of the asset, whatever efficiency was already there, that will be maintained. When I bought the Gadi, the mileage I was getting was 60 kmpl. Now if I get it serviced every year or every 6 months, that 60 kmpl will be maintained. Now the efficiency is not increasing, it is there at that point only. Will that be considered as capital expenditure? No. Any money that you have spent on normal service, normal repairs, which is maintaining the existing efficiency and not increasing the efficiency, will be treated as revenue expenditure. Now the same 5,000 which I spent on the Suzuki Access 125, after spending money, now the mileage from 60 it has become 65. That means the efficiency has increased. Now whatever you have spent towards that for increasing the mileage, that will be considered as capital expenditure, because that is increasing the performance in the asset. Okay, so that is efficiency. What is one more way of understanding efficiency? It should increase the revenue earning capability. Revenue earning capability of the business. So by putting some expenditure, if you are able, if the capacity to earn more, if your capacity to earn more is increasing, no, even then it will be considered as increasing efficiency. Okay. Now say suppose we have an existing classroom here. I spent some money on renovation for painting ashte. Earlier the capacity of this class was 60 only. Now also even after the renovation, it is 60. Renovation, maximum painting, all that after painting, solpa interior decoration after. Okay, no fixed assets is required, only some painting and other stuff, consumables. Will this be considered as a capital expenditure? Is it increasing the efficiency of my classroom? Is it increasing the efficiency? No. At least is this expenditure increasing the revenue earning capability? No. Earlier also capacity was 60 people only. I was able, the maximum revenue that I could earn is 60. Now also it is 60 only. So what change is happening? So whatever money I have spent on innovation, that is with respect to painting, that will not be treated as capital expenditure because it's not increasing the revenue earning capability. Other, say suppose there was some area in our classroom which is next to our, there was some small vacant area next to our classroom which we were not able to use because we had a huge wall. Now what I did is I got it renovated. Now we broke that wall. Now students can sit there also. For this I have spent 2 lakhs. Is it a capital expenditure, revenue expenditure? Now what happened? No, the revenue earning capability of the business increased because of this expenditure. Earlier the capacity was 60. Now because of this expenditure the capacity has become what? There was some space, okay, which we were not able to use. Now the spent money because of that, from earlier 60 people used to sit, now from 80-90 people can sit. Now it increased the revenue earning capability. Why? I can charge 90 students now. My revenue, I can earn more revenue, and that is because of this capital expenditure of 2 lakhs, and that becomes capital expenditure. I hope you have understood it correctly. Okay. So I hope all of you understood our distinction between capital expenditure and revenue expenditure. Correct? No? What? Now, next what we'll discuss. Then let's understand the difference between capital receipt and revenue receipt. This is very simple, guys. Okay, this distinction is very simple if you understand one concept. Whenever a cash flow comes in, whenever there is a cash inflow or outflow that is happening in a business, it can be classified into 3 things: operating activities, financial activities, and investing activities. Okay. Now, if you understand these 3 things, for example, what is operating activities? Operating activities means these are the cash inflows or outflows happening because of the operations, because of the daily operations of the business. Now, say suppose I have started a business and my business is to purchase and sell. My business is to purchase and sell mics. Okay, that is my business. Understood? Huh? Or I pay rent. What is this? I pay rent because that is my daily operation. No, my business is purchase and selling of mic, and I am paying rent, I am paying salary, I am paying commissions. All these, why am I paying? As part of normal operations of the business. Because the reason why I am paying all this, because I am purchaser and seller of mics. So it's all my operations. Whatever cash flow is happening, inflow or outflow, because of the normal operations of the business, that's called operating activity. Correct? No? Any other example? One example, good example was rent only. I am purchasing my operating activity. Sales of my operating activity. Then paying rent, paying salary, all these are what? As part of normal operations it is happening, because, and henceforth it will be considered as operating activities. Then comes our financing activity. What is financing activity? As the name suggests, now for the business to run, we need money, and that money should be financed somehow. What are the ways available for us? We can issue equity shares, raise money. We can issue debentures, raise money. We can take loan, raise money. We can issue preference shares and raise money. So any cash inflow or outflow happening because of finance activity, that will be called FA. Now what? By issuing shares, you raised money. This is a financing activity. To those equity shareholders, you paid dividend. That is a financing activity. You took a loan, financing activity. You are paying interest to that loan, financing activity. Repayment of the loan, financing activity. Buyback of shares, financing activity. Issuing of debentures, payment of interest, all these are finance activity. Then what is investing activity? Now any company, if they are earning good profits, they will be having excess money, and that excess money will be invested somewhere. To invest that excess money, whatever you spend, no, that will be considered as investing activity. I invested in equity shares of some other company. I invested in debentures of some other company. I got interest. That's a investing activity. Okay. I invested in equity shares of some company. Investing activity. I got dividend from it. Investing activity. Okay. Then one more thing that comes in invested activities, even if you invest your money, in non-current assets, then still it will be considered as what? Capital. Still it will be considered as investing activities. Investment in any other companies, any other shares. Excess money, you have invested it somewhere to earn money. That is also investing activity. And whatever returns you are receiving, that is investing activity. Or if you have invested the money in any non-current assets like investment in PPE, investment in furniture, sale of furniture, sale of PPE, whatever cash flow is happening, all this because of the non-current assets, whatever cash flow is happening, that will come under investing. All of it. These are the 3 things. Okay. Now, they are telling, if you are receiving any money as part of your operating activity, then it is called revenue receipt. If you are receiving money as part of your FA or IA, then it is capital receipt. Simple. Rent received, rent paid. What is it? We are talking about received. Okay, sales money received or received money from debtors. Is it my operating activity or these two are? Of course, my debtors or my customers have received money from them. It's an operating activity, hence it will be considered as revenue receipts. I took a loan, it comes under financing activity, capital receipt. I issued shares and received money, it is coming under financing activity, capital receipt. Got it? I received interest, it is an investing activity. No, I have invested money, that's why I am getting interest. It will come under capital receipt. Anything that you receive as part of your normal operating activities will only be treated as revenue receipt. Did you understand? I hope it is very simple. Again, maybe you have sold a fixed asset, you got money. Which receipt? You sold a fixed asset, got money. Will it come to OA? No, I told no. Any cash flow which is pertaining to purchase or sale of fixed asset will come under investing activity only. Correct? I told you, no? Will come in any investment of your money in non-current asset or sale of such non-current asset. That will come under IA. If it comes under IA, it will be treated as capital receipt. So any money that you receive by selling of a fixed asset, that comes under capital receipt. Okay. Only anything that you receive from normal operations of your business, which is generally sales. Only that will be considered as revenue receipt. Did you understand, all of you? Clear? Next. Next we have capital profits. Or loss. Then we have revenue profit or now again same thing. If it is a profit related to financing activity or investing activity, it will be treated as capital profit or loss. If it is a profit related to operations of the business, it will be treated as revenue profits or loss. Very simple classification. For example, profit or loss on sale of fixed asset comes to which one? Investment activity. It will be treated as capital profit. Profit that I have made by selling of mines, it is a operating activity, comes under revenue profit. Okay. Profit or loss on sale of investment, again investment is investing activity, comes under capital profit. You are understanding? Any profits pertaining to investing or financing activity, capital. Anything which is pertaining to operating activity will be treated as revenue profits or loss. Okay. Done? Did you understand the classification? Yes. So let's go to the next thing under your accounting fundamentals. Come on, guys. So next, let's start with your most famous accounting cycle. Correct? No? So what is accounting cycle? It's basically, it is the process that starts from the point when the transaction happens, the point from when the recording of transaction happens, till the point it becomes, from the point transaction happens, from the point you start recording the transaction till the transaction reaches the final accounts under your balance sheet and P&L. This process is called as accounting cycle. All of you understood? Now let's understand the entire accounting cycle very briefly with one of the examples. I will take 5 transactions now and I will show you the entire accounting cycle. Okay, in very brief. Please understand this is a revision video and we cannot go very deep with respect to each and every topics. Correct? No, we should not forget that this is a revision video. Okay, what we expect from you is you have already watched the in-depth lectures somewhere, not only from our academy, from somewhere you have already watched the in-depth lectures, and this you are watching only to revise the concepts. Okay, that is my assumption when I am doing this video. Okay, I expect you also to see it from the same perspective. Okay, if you really want in-depth classes, if you want to learn accounting even really well, then please don't forget to consider our full-fledged classes here at Success Academy or iProledge Academy. Make sure you contact them, and you'll get our full-fledged classes, and you can enjoy accounts. Okay. What? So shall I start? Shall I take the example? Okay. So let's now focus on your accounting cycle, correct? What do we understand in accounting cycle? So whenever a transaction happens, from the point of journal entry till the transaction reaches the financial statements, which is balance sheet, P&L, trading account, correct? That is your process of accounting cycle. Okay. So now let's try to understand this accounting cycle in a very brief and simple manner. So let's try to understand the entire process with a simple example. I'll take any 5 transactions as example. Okay. One transaction. Okay. Owner introduced capital of rupees 1 lakh. Okay. Next is what? Maybe he purchased goods rupees say 50,000. Then what? Then he made sales, cash sales only. He made cash sales of rupees say 1,50,000. Oh. Then fourth, he paid rent of say 10,000. Fifth, he also purchased furniture, which is kind of rupees 20,000. So I'll take these 5 transactions as example and would like to explain to you the accounting cycle. Okay, so come on. First, whenever a transaction happens, what option do we have? First, we have to option antala. First, we have to record the transaction. Correct? No. So how do you record a transaction? You record the transaction via journals. Okay, there's something called as journals. You record transaction via journals. In journals, we have 2 kinds of things. Okay. One is journal proper, and one more is subsidiary books, or they are also called as special journals. So journal proper or special journals. So we have 2 kinds of journals. Whenever a transaction happens for the first time, it's either recorded in one of the 2 places. Oh, is it, sir? Sir, when do we use journal proper? When do we use special journal? So first you have to understand, in journal proper, journal entries only will come. Okay. In subsidiary book, journal entries won't come. Okay. Only in journal proper, journal entries will come. Okay. Now generally for all transactions you have journal entries. Okay. No doubt, for all transactions, be it whatever it is, if it's a transaction, have a journal entry. Okay. So then if all transactions have journal entry, I could have recorded by a journal proper only. What is the subsidiary books? I'll tell you. I will take one example and I will tell. Say suppose we have some credit purchases. I'll take one example. Entry for credit purchase goes like this. Purchases account debit to creditors. 1 lakh, 1 lakh. Now there is a journal entry. What? In an entity only one purchase entry will be there? No. In an entity there will be lots of purchases entry. Not only one purchases entry will be there. Correct, sir. You are right. Now that's why what we'll do. Every time purchases happen, should I keep passing these purchases entries or should I do business? Not possible. No, we know that every day some credit purchases will be there because that is our operations. Correct? No, it will be more frequent. So what we'll do is, to record all the purchases, we'll not take this route. What we'll do is we'll take the route of subsidiary book. For example, there are various subsidiary books. Examples goes like this. Correct? No, we have purchase book, sales book, purchase return book, sales return book. Okay.
So what I'll do is, since I cannot record journal entries every time, no, I just record the information of the transaction in purchase book. Okay, I'll just record the information of the transaction. Now, am I passing any journal entry in subsidiary book? No. I am just doing what? Just recording the info. You would have seen purchase book format, correct? No, purchase book format. See, this is purchase book format as you can see in the screen, correct? No, see, we have date column, we have particulars column, we have inward invoice number, whatever. Since whenever you have purchased, your supplier would have given one invoice. That inward invoice number is there, LF number, amount is there, correct? No. So this is what you record, that's all. Are you recording any journal entry? No. Sir, if you are not recording journal entry, then how will it go to the next stage? You know that in accounting cycle, the second stage is ledger. If I am not recording any journal entry, sir, how will we go to the second step? It will go to the second ledger, second process, that is ledger entry, directly from subsidiary book. Okay, journal entry will not be passed. From subsidiary book, it will directly go to the second step. So just to confirm it again, what you have to understand is, whenever a transaction happens, it can be recorded via journal proper or subsidiary books. If you record it via subsidiary book, then it cannot come again in journal proper. If you cannot record some transaction in subsidiary book, you have to record it via journal proper only, and then only you can go to the second step, that is ledger. Okay, now from first step, how will we go to the second step? Either you come via journal proper or via subsidiary book. Both and all not possible. Okay, any one you have to take the entrance. So what happens? All the purchases, to be very precise, credit purchases happens in purchase book. All the credit sales happens in sales book. All the credit purchase returns happens in purchase returns book. All the credit sales returns happens in sales return book. Sir, what about cash? For cash sales, to record cash sales, cash purchases and everything, we have a separate book called as cash book. Technically, cash book, what it does is it records all the cash transactions, cash receipts and cash payments. Since it's recording cash receipts and payments, it is taking care of cash purchases and cash sales also. That's why here and all we record only credit transactions. All of you correct? And if you are purchasing capital asset, furniture, all that will not come in purchase book. Okay. Only if you purchase those goods for the purpose of resale, only that will come in purchase book. All your purchase of furniture and other capital assets for on credit will not come in purchase book. So then what to do for those? It will come via the other route, which is journal proper route. That means you have to properly pass journal entry. Whereas if you come via subsidiary book or special journals, you will just enter it in the format which I showed. Correct? No? The format of all the books are very similar only. It's similar to what you saw. You will just record it there. Okay. The totals of it will be directly posted to ledger. Again, entry will not be passed. Did you understand? Yes, sir. Now, this is how I will now record the above entries via journal proper only, via journal entries. So, how to pass journal entries? You know, to pass journal entries, we have two methods. One is golden rules of accounting, and one more is your modern approach. Modern approach is much more simple, practical, easy to apply as compared to golden rules, but however, we will cover both. Golden rules tells that you can classify any accounts into three types. What are those three types? It's real, personal, and nominal account. Correct? No? Real, nominal and very simple. All the income and expenses accounts will be treated as nominal account. Then what will come in personal? Actually, real and personal combined, all the assets and liabilities account will come. Okay. Real plus personally, only asset and liabilities can come. In nominal, only income and expense can come. Sir, how to classify these assets and liabilities to further as real and personal? To keep it very simple for your understanding, in real account, all kind of your tangible, intangible assets will come. For example, all the fixed assets, plant and machinery, furniture, stock, okay, cash, all these will come under real account. Okay, basically are all tangible, intangible assets, liabilities. Okay. What will come in personal? In personal account, those accounts which come, which is represented by person. Person can be natural or artificial. Artificial person means it includes other company, partnership firm, any other business entity, trust also. So it includes artificial person also. Just to take an example, your debtor, creditors, all these are personal accounts, whereas your plant and machinery, furniture, goodwill, patent, all these are what? These are all real accounts, correct? No. Stock is which account? Stock is again real account. Then, any other example we have? Say suppose income tax liability payable. It is what account? Income tax payable. Is it payable to a person? Yes, no. Sir, person na? Yeah, government is a person. No, it's artificial person. So income tax payable is a personal account. You have taken loan from the bank. Bank is a person. No, artificial person. It's a personal account. Correct. You have deposited some money in the bank, FD. Again, the money is receivable from a person, HDFC. So it is personal account only. Anything which represents receivable or payable of money from persons being artificial or natural, then these accounts are called personal accounts. Anything other than this will come under the real account. So basically these are the classifications. Now for these three accounts they have given us three different rules. For real account, debit what comes in and credit what goes out. For personal account, debit the receiver, credit the giver. For nominal account, debit all expenses or losses and credit all income and gains. So these three rules they have given. Via using these three rules we can pass journal entry. So I will just show you for first transaction via golden rules, okay? Because we'll be mostly using the modern approach. For your understanding, I will show the first transaction via golden rules only. Okay, owner introduced capital of 1 lakh. So let's start recording journal entries. Only first one I'll do via golden rules. Okay, so what is happening? Whenever you're doing journal entry, no, via golden rules of accounting, now I'm telling. Modern approach I'll tell later. What I suggest is you also follow modern rules because it's very simple. Now in golden rules, first step is find out two aspects. Owner introduced cash in the business. So what is happening? Cash, which is an asset, that is increasing. Then one more aspect is capital, that's liability. That's like liability towards owner. So that is also increasing. Capital. What is the aspect of this capital? It's capital only, no? It's an aspect. What it is? Hey, just now we have told, no? The five aspects in accounting are assets, liabilities, income, expense, and capital. Now, cash is what kind of account? Out of real, personal, nominal? It's nominal, no. Is it personal? No, it is real account. Correct, no. Whereas capital is what? Capital is representing a person who is the owner. So it's a personal account. So what they have told? For real account, the condition was debit what comes in and credit what goes out. From the entity's point of view, cash is coming in. Correct, no. So cash is coming in, so I have to debit it. Debit what comes in. So I will debit cash account. Now for capital, I have to apply personal account rules. Personal account rules, debit the receiver, credit the giver. Correct? No. Here, the giver is our owner. Okay. Owner is giving us. So credit the giver. So I will credit capital account. How much? How much is the capital that he has put? It is 1 lakh. So this is how we do journal entries via golden rules of accounting. This you should know for the sake of it, okay? But to learn journal entries, the best method is modern rules of accounting. This is for your revision purpose. Now, what was the second transaction? The second transaction was purchase goods rupees 50,000. Purchase goods 50,000, correct, Allah? So this we'll try to understand via modern method. Modern method, same thing, find out two aspects. So what are the two aspects here? One is your purchases. Purchases is a expense. Okay. Again, find out two aspects. One more is you're purchasing, no, your cash is decreasing. Cash is an asset. Correct? No. Two aspects you have to find because dual aspect. Okay. Sometimes what will be happening? No. Same two aspects only will be affecting twice. That is also dual aspect only. Same aspect getting affected twice. For example, purchase of furniture. Entry is furniture is an asset increasing debit. Cash is an asset decreasing credit. So asset increase, asset decrease. Same aspect affecting twice. So this also will be considered as dual aspect only. This is for your information. Now, what is happening here? Here purchase is expense increasing. Cash is an asset decreasing. Correct? No. What now you have to do is, I'll tell you, dead LIC. Okay, this rule you have to apply in the second step. Simple step. Okay, dead LIC. If it is debit, if it's if it's drawings, expenses, asset. ಈ ಮೂರು ಏನಾರು ಆಗಿದ್ರೆ, okay, these three things are increasing in a transaction, then debit it. ಆಯ್ತಾ? Decreasing in a transaction ಅಂದ್ರೆ vice versa, credit it. Similarly, liability, see, income, capital. In a transaction, if these are increasing, credit, decreasing, debit. This much if you remember, enough. Dead LIC, dead LIC. Now what is happening here? Purchase is an expense. Increasing, what I have to do? Expense. Increasing, I have to debit. So purchases account, debit. 2, what is happening? Cash is an asset. Decreasing, cash is an asset. Asset, decreasing, credit. So 2, cash account, 50,000. 50,000. I hope all of you have understood. Okay. So being always, you know, after journal entry, we have this practice of writing narration. So being purchase of goods for cash. So this is drafting journal entry via modern rules of accounting. I hope you are clear. Again, don't forget this is a revision class, so we cannot spend more time on this. We can just touch upon whatever we have discussed. Now, from third journal entry, we will use our normal learning only. So fast, let's go. The third one is sales. Cash sales has happened. How to record the entry? Cash is an asset increasing. Debit to sales is an income increasing. Credit. Okay, you can apply my rules. Whatever I've taught you, everywhere it will apply. So you should do. Pause the video and if you want, just see whether it is working. Okay. Cash account debit to sales. I've sold it for how much? I've sold it for 1 lakh. 50,000, 1 lakh, 50,000. Then what was the transaction? The next transaction is rent paid. Rent is an expense. Increasing. Debit. 2, cash is an asset decreasing. Credit. So rent account debit to cash account. 10,000. 10,000. All of you clear? Then last one more thing I have done. No, what is it? Purchased furniture. Furniture is an asset increasing. Debit. Then cash. Furniture to cash is an asset decreasing. Credit. Okay. Kitna bhai? 20,000, 20,000. Okay. So I have just formulated journal entries. So first step has got over. One more thing I would like to add in our question. I'll also give information about closing stock. What I did is at the end of the year, I've gone to go down, I've checked. So I have closing stock worth 10,000. Okay. Because closing stock will not automatically come in books of accounts now, because whenever inflow of goods or outflow of goods is happening, we are recording it via purchase account or sales account. Closing stock for the first time it comes in trading account only. So what I'll do, I'll directly go down, I will count and see there is 10k, directly I'll incorporate it in a closing entry. The closing entry is closing stock account debit to trading account. If you remember, you remember. Remember? Good. So closing stock is 10k. Okay. Now all these transactions have recorded. Okay. Closing stock will come in trading account. Okay. There. The entry will be passed there only directly. So right now we have recorded all the transactions. Once all of these are recorded, then we'll enter into the second step. What is our second step in the accounting cycle? That is ledger. So what will I do in ledger? For all the distinct accounts that is used in the journal entry, I will open one ledger account. So how many distinct accounts are used? So first cash, second capital, purchases, cash already considered. I have to take all the distinct accounts, different accounts. Then cash done, fourth sales, fifth rent, sixth furniture, 6 different accounts I have to open. So I will open it. The format of ledger goes like this. How it goes? First one is cash account, debit, credit, particulars, rupees, particulars, rupees. Okay, all of you. So okay, so what did we do here in ledger? We are opening 6 distinct different accounts, correct? So all the different accounts that I've used above, I'm opening one ledger accounts. Now let's understand how to post it. Okay, how to post it. Now come, you are supposed to do it for all the transactions, okay, technically. Now the first entry is cash account debit to capital account. Now what we have to do? One entry should come in cash ledger account, one more entry should come in capital account. Because in the journal entry there were two things, no, cash or capital. The posting should happen. Cash account, capital account. Okay. Particulars, rupees. Particulars, rupees. So what will I do? So come here, cash is an asset, cash in the journal entry. This is the journal entry I'm posting. Now in this journal entry, cash is debited. So in the ledger of cash account also, it should come in debit side. In journal entry, if that particular account is debited, then in ledger also it should come in debit side only. So cash, it should come in debit as what? As to the opposite account. What is the opposite account? The opposite account is capital. So to capital. Capital account will have side. Capital only. See, in the journal entry, capital has been credited. So here also it would come in credit side. So by cash account. Correct. In journal entry, capital account is credited. So even in ledger, it should come in credit side only. Which was the other account? Cash account. So I've done the posting. How much was the amount? Don't forget to put the amount. 1 lakh. 1 lakh. Correct? No? Generally, this is the ledger format. There's one more column here. It will be date. Okay, generally. So date particulars rupees, debit and credit. You have to record the date of the transaction also in the date column. Correct? No? So that's how you post journal entry. If that particular account is debited, then in its ledger also it will come in debit side with the opposite account. If that particular account is credited, then its ledger also it will come in credit side with respect to opposite account. This is how posting happens. Now, if it is an asset or liability account, asset, liability, capital are there, the accounts will be balanced as by balance carried down. So you have to take the highest side, okay, and take the totals of highest side in both the sides and take the balance, okay. It will be balanced. And if it is a nominal account or if it is a income or expense, whatever it is, then it will not be balanced. It will be sent to P&L account for the purpose of computation of profit or loss. Correct? No? This is how you post ledger. Okay. What is the third process that comes in your accounting cycle? Once ledger has happened, you will prepare trial balance. Okay, trial balance is just a sheet of paper that is prepared to check the accuracy of account, because we follow double entry system of accounting. Okay, in the ultimate, for your balance sheet to tally, for everything to happen correctly, today all your debits must be equal to your credits, because whenever you recorded the transaction, you had one debit for one credit. Then ultimately also your debit should be equal to credit. No. So before entering into the preparation of financial statements, we will check our accuracy once by preparing trial balance. Okay. How will be the format of trial balance? It will be something like this: particulars, debit and credit. All the debit balances of the ledger will come in debit side. All the credit balances of the ledger accounts comes in credit side. Sir, how to determine balance? Now, first of all, if ledger account itself is given, then if debit side is greater than credit side, it has a debit balance anta artha. If credit side is greater than debit side, andre credit balance ಇದೆ ಅಂತ ಅರ್ಥ. Okay, now if the ledger account is given. So if ledger account is not given, just numbers is given, just account name is given, then how to determine? To determine, it's very easy. Again, use your dead LIC only. Okay, if it is drawings, expenses or asset, then it has a debit balance. If it is liability, income or capital natured account, it will be having credit balance. Okay, directly you can classify like that only. So all the debit balance accounts comes in debit side, all the credit balance account comes in credit side. Okay. Sir, then one more thing from an exam point of view, what you should know is, you should know that closing stock cannot come to trial balance. Closing stock cannot come to trial balance. Why? Because closing stock is already represented by two accounts which is there in trial balance. That is opening stock and purchases. So again, closing stock cannot come. Under only one circumstances, closing stock can come to trial balance. In which circumstances? Instead of opening stock, purchases. Okay. If in the trial balance, if they have taken adjusted purchases, or in trial balance if they have taken COGS, then closing stock can come in your trial balance. Sir, what is this? It's opening stock plus purchases minus closing stock. Correct? Sir, why can closing stock come if adjusted purchases is used? Because I told no, closing stock is represented by opening stock plus purchases. But in COGS, what you have done? From opening stock plus purchases, you have subtracted closing stock. Since you subtracted the closing stock, now opening stock and purchases is not representing closing stock. So closing stock can come in trial balance. So what did we say? Closing stock generally cannot come to trial balance. Okay, but if adjusted purchases is given or if COGS is given in trial balance, then closing stock can come in trial balance. Are all of us clear? So once I prepare trial balance, the debit and credit side of the trial balance should tally. If it's not tallying, what will we do? That means if it's not tallying, there is some error, okay, which we have to rectify, which we learn in rectification of errors. Right now, for now, whatever balance is there, no, that balance I would have transferred it to suspense account. Yes or no? So say suppose debit side 10,000 came, credit side 8,000 came. Still I have balance of 2, no? Greater side is 10. I have balance of 2. 2 will be transferred to suspense account. Now suspense account has credit balance of 2,000 rupees. Later when I rectify the errors, suspense account will automatically go off. Okay? Did you understand? Now we prepare trial balance. Okay? Whatever trial balance we prepare now is called unadjusted trial balance. Later we'll have some adjustments. Okay? Lots of adjustments, year-end adjustments we'll do. If there is any errors which we have identified, that we will correct. Once all that is corrected, then we'll get an adjusted trial balance. Once adjusted trial balance is done, then what we'll do? Once adjusted trial balance is done, then we will prepare financial statements. What is financial statements? Your balance sheet and P&L. Preparation of balance sheet and P&L we'll discuss very detailedly when we come to the part of final accounts. Okay. Just know that once trial balance, adjusted trial balance is done, we will prepare balance sheet and P&L. All of you understood? Yes. Then sir, what we are supposed to understand? Then let's understand about cash book. Correct? Now, what is cash book? Cash book records the receipts and payments of cash. They record only cash transactions. Cash receipt, cash payment. We have different kinds of cash book. We have single column cash book, double column cash book, triple column cash book, and petty cash book. What is single column cash book? Okay. See what happens in single column cash book is, in single column cash book, we have only one column. Hey sir, where one column? We have 4 column. Hey, we are talking about the amount only. Okay, normally we see, if you see, cash book exactly looks like a ledger only, no? Cash book exactly look like ledger account format. See, date particulars LF amount, date particulars LF amount. Okay. Cash book format is also same. From this, we have an understanding. Okay, I will tell you once this discussion is over. Single column cash book. And then we have only one column for recording cash. Receipt will come in debit side, payment will come in credit side. Then we have double column cash book. Here along with cash column, we have bank column also, which records bank receipt and bank payment. Bank receipt debit, bank payment credit side. In triple column cash book, along with cash and bank, we have one more column for discount. Debit side will borrow discount. That is called discount allowed, because generally while receiving only we allow discount. And credit side will borrow discount column is discount received, because while paying only generally we receive discount. Correct? No, because payment comes in credit side. While paying only we get discount. While receiving only we give discount. Correct? So that's why debit side discount allowed and credit side discount column is discount received. So even that discount is also recorded in the respective column. That's why it's called triple column cash book. Then we have what? Multi-columnar cash book. Here you'll have various columns, okay, and you can use whichever, and the heading depends on the business type. Okay. Now if you are a MPO, for you subscription, donation, interest received, miscellaneous income. See, donation, subscription matters, no? Why it matters? Something happened. Wait a second, guys. So let's continue. We were discussing about multi-columnar cash book. So what is happening here? Here we have multi-columns, as you can see, for subscription, donation, interest received, miscellaneous income. So multi-columnar cash book is, the thing is it will be having multiple columns. Sir, which are those multiple columns? Depends on what business you are. Now for NPO, subscriptions and donations received payments matter. So they have put columns for subscriptions and donations. If you are a different business and if you want different columns, then you can put those columns. It's very flexible. Depends on the nature of the business. The thing about multi-columnar cash book is you have multi-columns, but the idea is same. Receipt, debit side, payment, credit side. Did you get that? Yes. Then we have petty cash book. What will happen in petty cash book? All the petty expenses in a business. Petty and small expenses in the business. Okay, all that will be recorded in petty cash book. Okay, if you can see, this is the format of petty cash book. Okay, if you see, only this part is receipts. Okay, can you see? This part is receipts. From here till here, it is all payments only. Sir, why only one column for receipts? Guys, always for petty cash. No, receipt is petty cash is used for what? For petty expenses. So every time petty cash gets a refill from the main cash which is there in the entity. The main cashier gives some money, say 10,000 to petty cashier. Petty cashier with that amount, he will spend the money and incur all the petty cash expenses. Okay. Say suppose out of 10,000 he has spent 4, remaining is 6. Again next day the main cashier refills the remaining and makes it again 10,000. So the one and only source of receipt generally for petty cash is the cash they get from main cash account. So that is why we have only one receipts column. Then date column, voucher number, particulars. Then we have separate columns for all kinds of petty expenses. Okay. So you have to put a particular petty expense, under a relevant column. Okay. If it is conveyance, then you have to put it under conveyance. Conveyance is employee traveling. Okay. People traveling. Cartage is goods traveling, goods transportation. Stationery, postage for posts, wages and sundries. So relevant columns you have to use for relevant expenses. Okay. So that's basically the format of petty cash book. Okay. Receipts comes here and payments comes here. Okay. Once all the payment is done, see if you can see this example, main cashier had refilled with 20,000. Okay. Out of that they have spent 9,800. Balance remaining is 10,200. No. Again the next day the head cashier has refilled. From 10,200 he'll make it back again to 20. So he'll give further 9,800 to refill it back to 20. Again petty cashier will spend. Again next day head officer will refill it back to 20,000. That's how petty cash works. So yeah, that's about it. Correct? No. Now some more things about whatever we have learned till now is that, coming back here, no. So basically we read what is subsidiary book. Some more things about that we have to understand. There is something called as primary book and secondary book. Okay. Primary books and in accounts we have only one and only primary book, that is ledger. Okay. Rest all is secondary books. All the journals that you saw, no, be it journal proper or special journals or subsidiary books. Subsidiary books, journal proper, all these are called as secondary books. Ledger itself, ledger only is called as what? Primary book. Correct? This they can ask. And then one more thing what you should know. We came to know, okay, that whenever a transaction is recorded by a subsidiary book, directly it gets posted to ledger from there only. Again entry and all is not passed. Now see, say we know one of the secondary book we know is cash book. We saw the format of cash book also, single column cash book. It was exactly like ledger, no? It was exactly like ledger. Now tell me, if you record any transactions in subsidiary book of cash book, then do you think again there is a need of posting that entries to ledger again? No. Because the format of cash book was already like cash ledger. Why will you record it again 2 times? Sumne kelsa double time, not possible. ಒಂದೇ ಕೆಲಸನ ಎರಡೆರಡು ಸಲ ಮಾಡೋಕ್ಕಾಗಲ್ಲ. ಯಾಕಂದ್ರೆ ಕ್ಯಾಶ್ ಬುಕ್ ಫಾರ್ಮ್ಯಾಟು ಮತ್ತೆ ಕ್ಯಾಶ್ ಲೆಡ್ಜರ್ ಫಾರ್ಮ್ಯಾಟು ಎರಡು ಒಂದೇನೆ. ಸೊ ಅದಕ್ಕೆ ನಾವೇನ್ ಮಾಡ್ತೀವಿ, ಕ್ಯಾಶ್ ಬುಕ್ ಇರೋದನ್ನ ಮತ್ತೆ ಕ್ಯಾಶ್ ಲೆಡ್ಜರ್ ಹಾಕಕ್ ಹೋಗೋದಿಲ್ಲ. ವಾಟ್ ಎವರ್ ವಾಸ್ ದೇರ್ ಇನ್ ಕ್ಯಾಶ್ ಬುಕ್ ವಿಲ್ ಅಗೈನ್ ನಾಟ್ ಪೋಸ್ಟ್ ಇಟ್ ಇನ್ ಕ್ಯಾಶ್ ಅಕೌಂಟ್. ವಿ ಟ್ರೀಟ್ ಕ್ಯಾಶ್ ಬುಕ್ itself as a cash ledger, and that's why cash book is known as both primary book and secondary book. It's both a journal and a ledger. Why is it a both journal and a ledger? Because cash book is a subsidiary book. It's a special journal. We treat cash book itself as a ledger, and we know ledger is a primary book, so we treat it as a ledger also. So this can come many times. It has come in your exams also. Cash book is a both ledger and a journal. Okay, done. That is one thing you are supposed to know. So next we'll jump to what? So yeah, so then we have bank reconciliation statement. So what is bank reconciliation statement? Generally, you have two things. Okay, whenever a bank transaction is happening, that means bank receipt or bank payment, all the transactions will also be recorded by the bank, which is given to us in the format of passbook. And all the bank transactions will also record in bank column of the cash book. Correct? No, in second column, two column cash book, if you see here, double column cash book, we have a bank column which records only bank transactions. So all the bank transactions will be recorded in bank column of the cash book, and all the bank transactions also being recorded by bank in our passbook. So two things, technically both are supposed to match, but because of various differences, both will not match. Okay, various differences are there. Our job is what? We have to find out the difference and we have to give a reco statement. See sir, both are not matching because of these differences. Idike match agtilla. Anta we have to give one reconciliation statement to the concerned people. That's why we prepare BRS. Okay. Now sir, why will bank column of the cash book and passbook does not match? It will not match for different kinds of errors that we have. So what are the different kinds of errors that we have? So our errors can be classified into, okay, first we have timing differences. First reason. This timing differences are there. These are the differences which are created because of time. Okay. The best example of these timing differences are check issued but not presented. Athwa check received but not deposited. Even the best example of this thing. What? Timing differences. I'll tell you. Check issued but not presented. Andre, I have given check to my supplier. I was supposed to pay him. I have given him. But has he presented to the bank? No. If he will not present to the bank, then bank cannot process. If bank cannot process the payment, will the money go outside of my bank account? No. So what would have happened? Now one problem would have happened. The moment I gave check, I have recorded the payment. What am I telling? The moment I gave check, I have recorded the payment and I am telling, your liability is now gone because I have paid anta. Okay, I have recorded that payment. But has the money left my bank account? No, because that nonsense fellow has not yet presented it. If I had presented to the bank, money would have gone. But he has not yet presented. Or maybe he has presented, but bank takes some time. Right now bank takes very little, it's T+1, one day it will take. Earlier bank used to take more time. Correct, no? Now until my money leaves bank account, there will be a difference now, because the moment I gave check, I would have recorded the payment. But here, from bank account, the money will be deducted only when it is presented and processed by the bank. Because of this reason, now of course it will get cleared, but there is some time, no, time difference there. Today I issued, maybe in 3-4 days he'll present and the payment will go. So after 3-4 days the money will be deducted. Okay. Now, once it gets deducted, now it became equal. Okay, first I issued check, from cash book money went, but from passbook money has not gone. After 3-4 days, he presented, now money will go, both became equal. But for 4 days there was an imbalance, no, that's why it's called timing difference. For a particular time you'll have difference. After that particular time has gone, of course, your things will match. One more classic example is check received but not deposited. Same thing but ulta. Same but different. Okay, I have received the check. The moment I receive the check, I would have recorded it. But money comes to my bank account only when I have presented it to the bank. What I have done is I have received the check. I have recorded the receipt, but I have not presented it to the bank. So until I don't present, money will not come. Until I present, money will not come. Because of this, until I present, there will be a difference. No, that is called timing difference. For a brief period, there will be difference. Once the money comes to my bank account, the difference is gone. That's why it's called timing differences. This is one of the reasons why there is difference between BRS and cash book. Then one more reason why I have it is because of transaction differences. Okay. So what is transaction differences? Transaction differences is, just to tell it very simply, money will get deducted or money will come to your bank account without your knowledge. It will come and sit without your knowledge. If you don't have knowledge, tell me how will you record it? If money comes without your knowledge, or if money goes without your knowledge from your bank account, you will not know it, you will not record it. Of course, there will be an imbalance. Money automatically gone from bank, but you did not record because you don't know. There will be an imbalance. This is called transaction difference. One best example for transaction difference is standing instructions. What is standing instructions? I would have told my bank, hey bank, every month I'm supposed to pay LIC premium, okay, but I cannot remember every time. So I'll do one thing. Every month 10th money I'm supposed to pay to LIC people, okay. What you do is, I cannot remember this. Every month by 10th, okay, you only deduct the money and send it to LIC people. You only deduct. I've given you the authority. Anta, customers will give authority to bank, and bank will follow it. Bank will follow. Bank followed, and he deducted the money. I forgot to, I told this. I have not recorded. Now there's a difference. That's called transaction difference. One more example is bank charges, which are levied by bank. They will automatically deduct. Will they tell us and deduct? No, automatically deducted. I don't know. There's a balance. Correct? No. I had given some instruction to bank. Hey, collect all my money. Maybe I sent my bills for collection and I told him, you collect it and send it to me. Anta. He has collected everything and directly put the money to my bank. I don't know. Now, money in bank, money will be more. That I have not recorded in the cash book. There will be an imbalance. All these are transaction difference. I don't know that it has come or it has gone, because of which I have not recorded. Because of which there is a difference. That comes under transaction differences. Clear? Then, the third kind of reason is error. Error, as the name suggests, if I have made mistake in recording, it will not match, no? If 50,000 has come, I have recorded it as 5 lakh, then whose mistake? My mistake. Of course, will the both match? No. What if banks make mistake? I have sent 30,000, bank has recorded it as 3 lakh. Now also, my books and their books will not match, no? If I make error, both will not match. Or if they make error, both will not match. If there is any differences because of the errors, then that is also one of the reasons. These are the 3 reasons because of which the bank column of the cash book and your passbook will not match. Okay. So these are the 3 reasons. Now, how to prepare BRS? BRS will be prepared in a simple statement. Okay, we'll see in one of the problems that we solve. BRS can start from cash book and arrive at passbook, or it can start from passbook and arrive at cash book. Both are possible. Generally, you have to see in the question which balance is given. Okay, in the starting, we'll start our BRS from there. Okay. Now, how to do it? It's very simple. Okay, we'll directly do it in one of the problems. In BRS also we have 2 methods. Correct? Now, one is normal preparation of BRS, and one more is adjusted cash book method. Okay. So first we'll prepare normal BRS, and then we'll prepare adjusted cash book method. Okay. If you have questions. Okay. Both are BRS only. Why adjusted cash book comes into picture? Out of these 3 errors which I mentioned to you, first what happened, normally all these 3 errors we used to come in BRS only. Bank BRS statement alle plus or minus ಮಾಡ್ತಿದ್ವಿ earlier. But later what happened? They realized one thing. Hey, isn't it logical if only bank related differences come to BRS? Then it will be logical. Why is our error also coming in BRS? Was the question. I think you did not get it. I'll again tell it to you. What they thought was, in BRS, bank related differences should come. That makes sense. Every kind of differences, if it is coming, then how is it called BRS?
Let me try to give you an example. Okay.
Correct? No. So that was the problem. Let me give you an example. Now, let's take transaction differences. Bank has directly debited SMS charges from my bank account. Okay. They have given it in statement. Okay. What was the problem here? Transaction has happened. It's a correct transaction, but the problem is we have not recorded. Do one thing. Record it. No. Over. Why are you preparing one statement for ECO? The difference is why? Because you have not recorded that SMS charges. Is that a genuine transaction? Yes. Correct. No. If bank charges is debited, you record it off. Automatically difference will not be there. It will match. Why are you again showing it in BRS? What's the problem? So that's why what they did in the next, this adjusted cash method is, whichever differences is there, if we can rectify it, as accountants, then rectify it in cash book first. Okay. Then whichever which is not possible to rectify, or whichever which genuinely represents bank differences, that you keep it in BRS anta they told. Then it was more correct, no? See, SMS charges is deducted. What it's BRS difference? A bank reason, na? Hey, no, they have deducted. You accounted, finished. No, why are you showing it at the BRS? So generally, that's why only three things will come under BRS under adjusted cash method. Your check issued but not presented, your check received but not deposited, and your errors made by the bank. These three things will come in BRS only. Because if bank makes some error, how can I rectify in my books? Not possible. But if I make errors, that I can rectify. That will still come under adjusted cash book. But if bank makes error, I cannot do anything. So bank error will still come under BRS. Check received but not deposited is a check received but not deposited is a genuine bank mistake only. And the bank difference only. Let it come now. Check issued but not presented is a genuine bank difference only. Let it come. So these three things will come in adjusted BRS under adjusted cash book method. Rest all will come under cash book only. We'll adjust it in cash book. We'll only record it. Aita? Then automatically it will match, no? Then why simply bring it to BRS? Then you can rectify the mistakes. That is the reason behind the second method, adjusted cash book method. Did all of you get the matter clearly? And if you are liking this video, if you are able to understand the accounts very well, then please comment down below. That is the motive for us to do videos. Comment whatever you feel like, just comment. If I look at those comments, I'll definitely reply to you guys. Okay, awesome. So without any further ado, till now we have finished our most of the things. We have finished till BRS, correct? No. Next we have ROE, rectification of errors. So that we'll do it next. Okay, I'll keep it in the next part. Now what we'll do is, till now whatever we have finished, all those related questions from the previous year question paper or previous year model test papers, whatever is there, the latest ones, 2 or 3 last model test papers we will try to solve, and we will also solve the previous year question papers, okay, whichever is available, last 2 attempts for your reference. Okay, so we started till now whatever we have done, we'll solve it. Next we'll enter into ROE, then we'll solve for ROE also, then we'll enter into the further chapters like that only. Did you understand, ladies and gentlemen? Understanding? Very good, awesome, super. Now some more things about BRS I will tell you while we are solving the questions. Okay, come on. Now let's first start with what? Let's start with June 2025 paper. Okay. There's one more thing which we have not discussed, which is important. Okay. Now before going to questions, I will revise that also. Okay. One more very important thing that they'll test to you is provision for bad debts. The provision for bad debts. This one they'll test next level. Okay. So that's why I thought I will cover this. Okay. Pakka, this one question will be there now in most of the question paper. So generally I have 2 methods to solve this. Okay. Any which method is simple to you, you can follow that method. Okay. So first method is, okay, generally what we do is, whenever bad debts happens, we pass one standard entry. Bad debts is an expense increasing debit. 2, debtors is an asset decreasing credit. Whenever bad debts actually happen, and that debt proved to be bad, now I will not fetch even 1 rupee from that guy. So in that situation, what is the entry I will pass? Bad debt is an expense or loss increasing debit. 2, what will happen? Now debtors will decrease. No, once he is not giving money on that, debtors is an asset decreasing credit. So debtors account I will credit. Correct? No. Now what will happen? This is the entry I will pass whenever the bad debts happen. Sometimes, as per one of the concepts that we have already learned, that is conservatism concept, if there is a foreseeable loss, we will book it today only, no, as per that concept we have learned recently. Foreseeable income we will not book it today, but foreseeable loss we will book it today. Now what happens? I feel that next year some bad debts will happen. Okay. So what I will do is that for that provision I will book it now only. Okay. So what is the entry to create provision? Very simple. It's P&L account debit to PDD account. Okay, P&L account debit to PDD account is the entry for increase in provision. Okay, so I'll book the provision now only. Say 2K, 2K. I would have already booked much before. In year 1, at the end of year 1 only, I have already booked the provision that next year bad debt will happen 2K anta. I have booked. Next year what happens? Actually that 2K as your estimation will become bad debts. Now we pass one standard entry, bad debts to debtors whenever bad debts happen actually. So at 2K, 2K. Now one problem happened. Since you have already created provision in the previous year, again if you debit bad debts here, expense is booked twice, loss is booked twice. I thought last year also you booked, this year also you are booking, but the bad debts is same. So what we'll do, no? Again, using bad debts here will be wrong whenever there is provision. So that's why what habit we have is, what I'll do is, instead of bad debts, I will use provision for bad debts because this account is already created, no here. I will use this account only because that's a liability like, not a liability, not a liability, not a liability. Liability like account, it has a credit balance. I will use out that account, no. Then again expense will not be booked again in the next year. So what I do, once I actually pass bad debts entry, I will debit provision and credit out the bad debt which was earlier debited. So basically what I am doing, when the actual bad debts happens, yeah, we do bad debts to debtors, but provision was already there. No, use provision to debtors is what I'll do. Here I have rectified. So net entry comes to PD, provision for PDD account, provision for bad debts account to debtors. Okay, 2K, 2K. Sir, next what to do, sir? Next, what happened? You had created provision of 2K, it has a credit balance 2K. Later, when actual bad debts happened, you have debited it. Now, balance of the provision became 0. Now, say suppose in that year, in second year, you have to further create provision for 5,000. Now, you will increase provision by 5 because balance has become 0. No, it was 2. Later, you utilize 2 in year 2. It has become 0. From 0, you have to take the provision to 5,000. Now, you have to increase provision, decrease provision, you have to increase provision. Entry to increase provision is P&L account debit to PDD account 5K. 5K, the entry will pass in year 2. Okay, this is the standard thing that we follow. Okay, now let's understand this via one example, which is there in June 2025 paper only. Come on. So in June 2025, actually, it has come in one MCQ. Generally, what happens? It is either given in general, MCQs or normally given as questions, but it is tested. Okay, somewhere it will be tested. If not here, it will be tested in final account. Somewhere it will be tested. Okay. Now, what has happened in this question? See, the following is given in the trial balance of Rupa addresses. Okay. See, these three things is already come in trial balance. Very important to know. There is already a bad debts account which has come in trial balance itself, which is 12,200. See, if something has come to trial balance, that means ledger account is there. That means ledger account is there, Andre. Journal entry is there. Journal entry is there, and they have already passed bad debts entry. No, that's why it has come to trial balance. Yo, yes or no? If something has come to trial balance, if bad debts account has come to trial balance, then entry is already passed. Don't again pass it, ladies and gentlemen. Okay. So 12,200 is already there. So this debtors is 2 lakh. It's already there in trial balance. So it's after the effect of bad debts. Okay, now because both bad debts and debtors are in same trial balance. That means the effect of debtors is also already given. That's why bad debts has come. Okay, sir. Then we have opening provision 7,500. Opening provision and the closing of previous year. Last year closing provision was 7,500. Okay. Further there is a bad debt. Further there is a bad debt of 1,800. And Rupa addresses makes a provision for bad and doubtful debts at 5%. Tell me how much provisions will come in the balance sheet as at 31st March 25. So they are asking you please observe the question. They are asking how much provision will be shown in balance sheet at the year end. That means they are asking what is the closing provision that you will maintain. ಎಷ್ಟು maintain ಮಾಡಬೇಕು second year ಗೆ. So what will you do? How much will you maintain? 5% of the debtors. How much is your debtors? You have debtors of 2 lakh, but you have further had a bad debt of 1,800 which you would have written off. 1,800. Sir, we also have bad debts of 12,200. That also you minus 8. It is there in trial balance, no? If bad debts has come in trial balance, debtors is also there in trial balance, Andre. That entry is already passed. Debtors is already adjusted for 12,200 bad debts. That's why it's there in trial balance. The other bad debts which is not considered is 1,800. So that's why I'm considering only that. So your balance becomes 1,98,200. Of this 5% you have to maintain. That is what you have to maintain. What we are discussing now is how much you have to maintain. 5% of 198,200, which comes to rupees 9910. That is option A. All of you understood? See here, they have asked us how much closing provision we have to maintain. Now I'll further add one more question to this. Sir, with respect to this, whatever they have given in the question, how much has gone to P&L this year in 2025? How much has gone to P&L? So that we'll see. Okay. First of all, how do we do? You had an opening provision of 7,500. We just now decided that if later bad debts happens, instead of debiting bad debts, what we'll do? Use provision account only, no, because provision is already, we have already created provision in the previous year. We'll use that provision only to write off bad debts. No, will we again debit bad debts account? No, that was wrong. Two times expenses will be booked. That's what we learned. No. So under that approach, we already had opening provision of how much? 7,500 already. I will use this only to write off my bad debts. How much bad debts has happened in the current year? One bad debt is 12,200 and one more bad debt is 1,008. Okay. Now what would have happened to your provision account? This becomes minus 6,500. This would have become minus 6,500. Sir, the provision balance became negative. Yeah, it became debit balance. Provisions will generally have credit balance. Now you have written off all the bad debts. Provision has only got debit balance now. You have to maintain how much? You have to maintain 9,910 credit balance at the end of this year. That's what we decided, no? From minus 6,500, debit balance 6,500, you have to go to credit balance 9,910. That means you have to increase your provision by how much? 6,500 plus 9,910. That means you have to increase it by so you have to increase your provision by 16,410. Then only the closing provision balance will come to 9910. So how much will go to P&L? You increase by provision by how much? 16,410. What is the entry to increase provision? P&L account debit to PDD account. You are increasing your provision by 16,410. This is the amount that goes to P&L, and this is what you have to maintain as PDD at the end of 31/25. What will we do to PDD closing balance? PDD closing balance having credit balance will not go and sit in liabilities head of balance sheet because it's not a liability. So we will show it on the face of balance sheet. We'll show it as a subtraction from debtors. Okay, PDD account closing balance will be shown as subtraction from debtors. Okay, what is that closing balance? 9910. And how much has gone to P&L for this provisioning and everything? 16,410. There's one more way to find out how much goes to P&L during all this. One more way. This I will teach you. Bonus method. You can use it for whatever other purposes. Now, for what you can use? To get this number, no, one more method is, what is the total bad debts that has happened during the year? Total bad debts is, one is 12,200 and one is 1,800. Add it. This is the total bad debts. Okay, can you see here? This is the total bad debts. So this one more thing what you have to do is, now you just see the movement in provision. Okay, come here. How much is the opening balance of provision? 7,500. Aita. How much is the, keep 7,500 only, keep 7,500. How much is the closing provision that I have to maintain? We have already done, it's 9,910. From 7,500 to 9,910, you have to increase provision or decrease provision? Increase provision, okay. So increase by how much? So it's around 2,410. So 2,410. From 7,500 to take it till 9,910, you have to increase the provision. Increase and add that also. You have to increase it by 2,410. Now if you add all these three, what you will get? 16,410, which is this number only. Did you understand? Two ways to find out how much goes to P&L. Bad debts plus movement in provision account. Aita? Opening minus closing provision you do. Okay. If opening minus closing is a negative, do closing minus opening provision. If it's positive, add. If it's negative, subtract. Simple. Push up. So here you'll consider movement in provision. That means what you'll do, closing PDD minus opening PDD. This also if you do, you'll get it. So add the total bad debts plus movement in PDD. Still you'll get how much money went to P&L. Two ways to find out the same number. So generally for your accounting and everything, you use our above method only. Okay. Whatever bad debts has happened, that bad debts will be, what will be used to write off the bad debts? Provision only. Right? Then provision balance will change. From that change provision, you see which is the provision you have to maintain. If you have to go up and if you increase the provision, P&L to provision. If you have to decrease the provision to P&L. Okay. Simple. Done. Okay. So that's one thing. So now let's solve the relevant questions. Okay. I'll try to take practical ones only, okay, for our better. Oh, we have question from depreciation. So we are yet to discuss about depreciation also. There's one small putty question here. Can you see? State briefly the difference between purchase day book and purchase account. What is the difference? Purchase account is a ledger. Correct? No, it's a principal book. Whereas purchase day book is a subsidiary book. It's a special journal. We use purchase day book. We record transactions in purchase day book because there will be lot of transactions. For every transaction I cannot pass journal entry. I take the help of subsidiary book. Only credit purchases of goods which are purchased for resale will be recorded in purchase day book, whereas purchase account is a ledger. Once everything is recorded in purchase day book, the total of purchases will however later be posted to ledger account in the second step. That is purchase account, which comes in second step. Purchase day book, which comes in first step, which is called special journal, subsidiary book. So all these differences which you have discussed, you can write it. Correct? No? So we also have one more thing to discuss, that is your depreciation. So yeah. So now let's discuss about depreciation and amortization. Correct? No? What is depreciation? Depreciation, as per the definitions, it is systematic allocation of the depreciable amount of the asset over its useful life. Very nice definition. Correct? No? So that means why depreciation exists is the first reason is it is matching concept. Okay, sir, why matching concept? As the definition suggested, depreciation is the systematic allocation of the depreciable amount of the asset over its useful life. Now what happened? We read matching concept, correct? No. Now if you buy a particular, say, one plant and machinery, and the useful life of that plant and machinery is, say, 10 years, okay, and you have paid 10 lakh rupees for that asset, okay, 10 lakh rupees for that asset, correct? No. Now you get economic benefits from the asset over 10 years with respect to this particular asset. You get economic benefit over the period of 10 years, but you are buying the asset now, so 10 lakhs you are paying it today. If at all I had shown it as a normal expense, you know it's a capital expense, it will go to balance sheet as an asset. Say suppose that would have not happened, then what would have happened? If I charge it as completely as expense, now expense you booked it in year 1 only or year 0, at the beginning of year 1 only, you book the expense, but the benefit you are getting over 10 years because the useful life is 10 years. Now is the matching concept matching? No, economic benefits over 10 years, but the cost you have shown it as expense only in the first year. Wrong. Your matching concept is not matching, is not working. So that's why depreciation concept comes. What will depreciation do? What will do is whenever I buy a plant and machinery, entirely I'll put it into asset in balance sheet, and every year I charge depreciation, which is an expense which goes to P&L. As and when I am charging depreciation as an expense, what is happening? Your value of the asset is decreasing. Say when you bought it was 10. At the end of first year you passed depreciation. Now the value of the asset became 9. Again 1 lakh. Say suppose in my example depreciation is 1 lakh. Assume. Now 1 lakh is depreciation. 10 becomes 9, 8, 7, 6 over the years. And every year 1 lakh, 1 lakh, 1 lakh, 1 lakh is coming to P&L over the useful life, which is 10 years. Correct? Now this 10 lakhs has come to P&L as expense over 10 years as 1 lakh each. Now you see, the economic benefit from the asset is over 10 years and the cost is also allocated over 10 years. Now your matching concept is pakka matching. So that is first reason why depreciation we charge. Okay, and we know that depreciation is a non-cash expenditure, correct? No. That means whenever you show depreciation as an expense, is cash going? No. Generally when you show rent or salary as an expense, cash will go. But for depreciation, cash is not going. No, that's why it's called as non-cash expenditure. Okay. Now, so we already read, no, depreciation is a systematic allocation of depreciable amount of the asset over useful life. What is depreciable amount? Depreciable amount is cost of the asset minus residual value. What is residual value? At the end of the useful life, whatever money the asset fetches, no, that is called residual value. So cost minus residual value will be your depreciable amount. Okay. Now, how to calculate depreciation amount, sir? So we have various methods. First one is SLM, straight line method. How to calculate? Cost minus RV divided by useful life. If you do, automatically you'll get the depreciation that we are supposed to charge every year. Under SLM, depreciation amount will be same every year. Okay. If at all in question, if they have given any percentage, that percentage should always be applied on cost of the machine every time, no matter in which year you are. Because only when you apply the percentage on cost every time, you will get the same depreciation. And under SLM, depreciation will be same. Next, we have written down value method. Under written down value method, what will we do? The written down value, say suppose the cost of the machine is 10 lakh. Okay, they would have given one percentage, WDV is equal to 20%. Now what you will do? That percentage will first apply it on cost, 10 lakh into 20%. Okay, the depreciation comes to 2 lakh. Now reduce it, 10 minus 2. Value became 8. Again for the second year, you will apply this percentage on the written down value, not on the cost. 8 lakh into 20%. Next it becomes 1 lakh 60. Again for third year, you will apply percentage not on 8 lakh but on 6 lakh 40,000. This every time is called written down value. Always the percentage is applied on written down value. Okay, that is calculation of depreciation under your WDV method. Then we have sum of units method also. Okay, what is sum of units method? The sum of units method formula goes like this. So you have to take your depreciable amount first. So depreciable amount, you have written cost minus RV. Hey, cost minus RV itself is what? Cost minus RV itself is called as depreciable amount. We discussed, alva. So take that depreciable amount. Then multiply it with number of units produced in a year. Okay, in a year. And total units produced by the machine over its useful life. Okay, that they would have given in the question. Now, for here, if you can see, in the first year, the machine has produced 20,000 units. And the number of units that the machine can produce over its useful life is 2 lakh. Life can be measured anyways, no, either in terms of years or in terms of number of units it produces. Correct me, I can tell. Sir, you can use this machine until it produces 2 lakh. After that, not possible, sir. See, I am talking about the life only in terms of units. Total life is 2 lakh units. In first year, how much I produced? 20. So in that ratio, I am charging depreciation. What is the depreciable amount? Say cost is 6 lakh and residual value is 4. Then this comes to 56 lakhs. What depreciable amount? Into first year, how much you have produced? 20,000 units. Total 2 lakhs. So first year depreciation will be 5 lakh 60,000. Say suppose second year you have produced 15,000 units. Then same thing. Depreciable amount into second year production divided by total production. Then third year depreciable amount into third year production divided by total units. If you do, you will get the depreciation amount. These are the respective depreciation amount. This is how you calculate depreciation under sum of units method. So, understood how we calculate depreciation? Yes, sir. Now let's focus on accounting. Okay. Let's come to accounting for depreciation. How do we do accounts? Basically, we have two. Okay. First is a normal entry. Depreciation is an expense increasing. Debit and fixed asset is an asset decreasing. Credit, later depreciation is an expense, so it will be transferred to P&L. P&L account debit to depreciation. Correct? No, normal. Every time you are charging depreciation, your fixed assets is getting reduced. The effect of depreciation is reducing the fixed assets. This is normal depreciation. One way is this. One more way, same thing. I debit depreciation. Depreciation is an expense increasing. Debit to, now I will not test fixed assets account. I will put it to provision for depreciation account. Now all the accumulated depreciation gets accumulated in provision for depreciation account. Correct? No. Provision for depreciation will have credit balance. Sir, it has credit balance. Will it be shown in liability side of the balance sheet? No. It will be shown as a subtraction from the cost of the asset on the face of the balance sheet. It will be shown as a subtraction from the cost of the asset on the face of the balance sheet. Are we clear? Excuse me. Again, same thing. Depreciation is an expense will be transferred to P&L. That is still same. So, in second method of accounting, what you have to observe that whenever I am passing depreciation, the main asset account is not getting affected. Asset account is at cost only. In the first method, what happens? Say, suppose when you bought it, the asset is 10. Second, and your depreciation amount is 1 lakh every year. So every year, asset decreases to 10, 9, 8, 7. That happens in first method because you are crediting fixed asset every time you are passing depreciation entry. But in second method, you are crediting provision for depreciation account. Since you are not touching fixed asset account at all, your fixed asset will always be at cost. Your depreciation is getting accumulated in this account and it will have credit balance. All of you clear? So these are the two methods of depreciation that we follow. Okay. Then what do we do? Then what you are supposed to know? Then you should know about the sale entries. Okay, let's go through the sale entries of depreciation. Okay. How to record for sale? Okay. Now, the sale entries, accounting entries, depend on two things. Are we giving depreciation entry on PFD method or are we giving the depreciation without PFD? Based on that, our sale entry depends. Okay. Now, let's come to first possibility where PFD is not maintained. And you are not giving depreciation effect to provision for depreciation. You are giving depreciation effect to fixed asset account. In that case, how to do the sale entry? Step 1, give depreciation till the date of sale. Step 2, sales proceeds should come in the credit side, in the asset account. Here I am telling machinery, treat it as asset account, any fixed asset account. Okay. So first step, give depreciation for the asset that you are selling till the date of sale. Second, whatever money you get on sale, okay, that should be credited in the asset account. As what? By bank account. The entry becomes bank to machinery. Correct? No? Money is coming. Bank is an asset, increasing debit. Machinery is decreasing when you are selling. Correct? Alva? So the money that you receive towards sale should come in credit side of asset account as by bank account. Step 3, what will you do? Calculate profit or loss on sale. How to calculate? Always you have to do sale proceeds. And the money that you got by selling the asset minus carrying amount. What is carrying amount? The amount at which the asset is carried in the balance sheet, in your books. One more way to calculate carrying amount is, at what value you will be carrying any asset? Its cost minus depreciation that you have given on that asset till date. Its cost minus depreciation that you have given on the asset till date. Correct, sir. Okay, so you calculate like this. Always guys, not sale minus cost. It is sale minus carrying amount. What is carrying amount? Cost minus depreciation given till date. If you get a profit, if you get a positive number, it's profit. Should come in debit side of P&L as 2, profit on sale of asset. If it is loss, should come in credit side of asset account as loss on sale of asset. Because loss, in that case, if loss comes in credit side, the entry is loss account debit to machinery. Correct? No? Loss is increasing debit. We already know. Profit should come in debit side of asset. Entry will be, anti-clockwise, our students. Asset account debit to profit on sale account. Correct? No? How to convert a ledger to journal? This might be a useful trick to you. I'll just tell you. Now, can you see that some random ledger is there here? There is one entry here. To bank. This is a ledger posting. How can I convert this into journal entry? How should I know the journal entry? Always it works anti-clockwise. Either like this. For entries that comes in the right hand side, it is like this. For entries that comes in the left hand side, you have to find out journal entry like this. Okay. For example, this entry I want. It's machinery account to bank only. It cannot be bank to machinery. No, it becomes clockwise. Machinery to bank only. If some entry is there here, it's balance. Of course, it cannot be an entry. For example, here we have an entry in credit side. Okay, depreciation. How to find out the entry? Anti-clockwise. Depreciation account debit to machinery account. Always that only. Clockwise. not anti-clockwise. Okay. Now, with that logic, if you come here, if profit comes in the debit side of the asset account, then entry will be asset to P&L, profit on sale of asset. Profit on sale of asset is getting credited, profit increasing credit, we know from the journal entry. So anyways, just to keep it simple, if it is profit, comes in debit side of asset account, if it's loss, comes in credit side of the asset account. Are we clear? Yes. So see here, this is the journal entry whenever you sell, generally, you should know. Say suppose you have sold one asset at 5 lakhs and carrying amount was 3. That means your profit is, how much is profit? Sale value minus carrying amount. Profit is 2 lakhs. So bank account is an asset increasing debit 5 lakhs. To profit is an income increasing credit 2 lakhs. To machinery, asset is decreasing because you sold it. Asset decreasing credit 3 lakhs. Generally this is the entry. The posting I have told you how to do it. Correct? Step 1, give depreciation till the date of sale for the asset that you are selling. Second, credit the sale proceeds in machinery account. Then, if it's profit, debit side, loss, credit side. This is when PFD is not maintained. That means whenever the effect of depreciation is going to asset account only. If the PFD is maintained, that means if you are passing depreciation using depreciation account debit to PFD account, if this is how you are doing, then same situation only, okay, but only one step will add extra. Okay, almost similar to all what we read. One extra step will be there. That step 4 is transfer accumulated depreciation to selling asset. What happened in PFD case? The depreciation effect is going to PFD account and only cost component is there in asset account. Correct? No? But I am using carrying amount for the purpose of calculation of profit or loss. Carrying amount and no cost minus depreciation. So basically what I do is, the problem is cost is there in machinery account, depreciation is there in PFD account. What I will do, this depreciation which is there in PFD, I will transfer it to machinery account, asset account, and I will do all the entries normal, simple. Damar. Sir, we will transfer all the PFD. Hey, no, PFD of the selling asset. Transfer accumulated depreciation of the selling asset to asset account. Sir, what is the entry? PFD to machinery. From PFD you debit and credit in the machinery account. Okay, the moment you hit the depreciation to asset account, asset will decrease, machinery is getting credited. And PFD has a credit balance. On reduction, it gets debited. All of you? This one step adds, if at all you are doing sale entry in case where PFD is maintained. All the steps, all are relevant. Step 1, 2, 3, relevant. Step 4, you will do this one. And in the end, once you are done with all the sale entries is done, give depreciation on the remaining assets that is there which is not sold and close the case. That's how you do sale accounting. I hope you have understood. Okay. The next case is one more kind of sale entries they'll ask. Whenever machinery disposal, they'll ask you, do sale accounting using machinery disposal. How to do that? Again, this is also divided into two parts. PFD not maintained, PFD maintained. If PFD is not maintained and where depreciation effect is going to asset, step 1, what we'll do here, slightly different. ಸ್ವಲ್ಪ different is an Now what they are doing is, for the purpose of sale only, they want us to open one machinery disposal account. For sale, as you see, disposal and sale only, no? Now we are opening one machinery disposal account. All the concern, right now what has happened, the cost of the machinery, the relevant information of the machinery is there in machinery account, asset account. But we are doing sale entries in machinery disposal account. What I'll do is, since whatever balance is there, no, in machinery account, with respect to this asset, I will transfer to machinery disposal account. Okay. Whatever information is there in machinery account with respect to the selling asset, I'll transfer it to machinery disposal. Then I'll pass all my sale entries which I learned just now. Step 1, step 2, step 3, sale entries. I'll do all that, but not in machinery account, but in machinery disposal. Guys, simply I'm using machinery here. You treat it as asset. Okay. Then pass all the sale entries which you learned just before in disposal only. That means sale, money received on sale comes in credit side, profit debit side, loss credit side. Correct? All that normally you do, but in machinery disposal. Sir, we have, sir, if PFD is maintained, what is the case? Then one more case is the depreciation is maintained separately in PFD account. In that method, the PFD account balance, I transferred it to machinery account because there we did the sale entries. Now I transfer the PFD balance of the asset that is being sold, not to machinery account, but to machinery disposal account, but because now we are passing sale entries in machinery disposal account. That's all. Okay. Machinery account balance transferred to machinery disposal. Accumulated depreciation with respect to selling asset transferred to machinery disposal. Pass all the sale entries also in machinery disposal account only. That's how you do this case. All of you understood? Done. So we are discussed with depreciation accounting. Okay. So we are left with again rectification of errors. Correct? No. Fast we'll discuss of rectification of errors also. Come on, everybody dance to the kuchupudi. Henry, see, avagavag ಸ್ವಲ್ಪ ಹಾಡದ್ ಗಿಡದೆಲ್ಲ ಮಾಡಿಪ್ಪ ಓಕೆನಾ ಸ್ವಲ್ಪ chill ಆಗಿರಬೇಕು. Always don't take tension. I know you're all professional students, but being chill is very important. ಅವಾಗವಾಗ ಒಂದೆರಡು ಹಾಡು ಆಡ್ಬಿಡಿ ಏನಿವಾಗ. See, for me, no, whenever I sing song, I feel a little better. Okay. Good. I get a good feeling. So you also, if there is any activity that gives you good feeling, no, don't leave it. Do it. Just because you have taken professional course doesn't mean you have to leave the things you love. Balancing is a what? Heart. Balancing is a heart. Hey, no, it's ART art, not heart. Yay. Hello. We're talking about ART art, not HEART heart. ಅವಳ ಬಗ್ಗೆ ಎಲ್ಲ ಯಾಕೆ ಇವಾಗ ಸುಮ್ಮನಿರಪ್ಪ. Let's focus on the subject. That was also an error, no? That is an error which should not be rectified. Don't rectify that error. Accounting errors we can rectify, but her, she is gone. Don't rectify that error. Okay? Some errors should not be rectified. You understand, lah? So yeah, let's start with rectification of errors. We will finish this. Once we are finished this, we will be done with the chapter 1, all the discussions. Then we can aramse solve all the questions. Then we can give an end to this discussion. So rectification of errors. What is errors? Of course, guys, whenever we are doing accounting, passing entries, whatever in this process, there are chances that errors will happen during the process. So if errors happen, and if I find out the errors, then what am I supposed to do? I am supposed to rectify the errors. Correct? So that is what we are learning. We'll learn it. Now before that, let's understand what are all the kinds of errors that can happen. Now see guys, rectification of errors is generally questioned every time. Okay. And it's very simple also, but I want your focus here. Okay. Now let's understand the different types of errors. First classification that I do. Now errors ಇದೆ. Errors to classification ನೋಡ್ತಾ ಇದೀವಿ ಇವಾಗ. ಓಕೆನಾ? So ಇಲ್ಲಿ ಏನಾಗುತ್ತೆ? First I give you one classification, then I give you another classification. Focus. Now errors can be divided into 3 parts. Errors of omission, errors of commission, and errors of principal. Okay, there's one more kind of error which we have to discuss. It is compensating errors. All these 4 errors we'll discuss. Errors of omission andre no? Omission. Complete omission. Andre you forgot to record the transaction itself. Okay, 1. First, you forgot to record the transaction itself in the journal. Or second, you have recorded the transaction in journal, but you forgot to post it to ledger. Both will come under errors of omission. So first one, forgot to record the transaction itself, and second, recorded in journal but forgot to post it in ledger. That is errors of omission. Then comes errors of commission. I would like to keep it simple. Errors of commission is all the silly mistakes. ಆಯ್ತಾ? All the silly mistakes come under error of commission. Commission ಅಂದ್ರೆ ಮಾಡುವಂತದ್ದು ಅಂತ. Committing, commission. ಹಿಂಗೇನೋ ಮಾಡುವಾಗ ಆಗಿರೋ mistakes is errors of commission. For example, what? You recorded a transaction in journal. Okay? 500 was a transaction. Okay, you purchased something, amount was 500. You have recorded it as 5,000. Silly mistake. Correct, no? Then, in journal, the transaction value was 500 only, but when posting it to ledger, you took a different amount. Again, silly mistake. Correct, huh? And also, don't forget one thing. Now, say suppose one purchase transaction has happened. Purchase account debit to creditors. Say credit purchase. One posting will go to purchase account ledger. One more posting will go to creditors account ledger. Correct, no? And amount is 500. In purchase account you posted correctly as 500, but in creditors account you posted wrongly. Again what? It's a zilly mistake. Correct? No, not. It's not silly. It's a silly mistake. Then what could have happened? All these silly mistakes only, guys. Then, you know how posting happens to ledger from subsidiary books? I take the total of purchases book, put it in purchase ledger. And each individual creditors entry which will be there, creditors entry will be there in purchase book. That I will post it to creditors ledger, because you know purchase book is used only for recording of credit purchases. Credit purchases in the early account, one purchase, one creditor. Total of purchases will be posted to debit side of purchases account, and creditors total will be, creditors, each individual creditors total will be posted to the credit side of the creditors account. Alva? So ಹಿಂಗೆಲ್ಲ ಆಗುವಾಗ maybe you are totaling the purchase book total, and while totaling like that, okay, total maybe actual total is 10,000. You while totaling you made a mistake because you are thinking about cinema while doing the problem. See, never do that. Okay? Think about problems. Don't think about cinema. Okay. So, since you are thinking about it and you are totaling the purchase book total became wrong, and you have posted the wrong total only to the purchase account also, purchase account ledger also later. Now, this is also what? A very, very silly mistake. Sorry, silly, it is silly. Very, very silly mistake. So, all these kinds of mistakes or errors are called errors of omission. Then you have what? Errors of principle. Errors of principle means you have applied the accounting principles itself wrongly. For example, if I purchase furniture, entry should be what? Furniture account debit to cash. Furniture is an asset. It's a capital expenditure. Correct? No? What did you do? You purchased furniture. Your business is not purchase and selling of furniture. Your business is something else. Purchasing and selling of mics maybe. But when you purchase furniture, you should have passed furniture to cash. But what did you do? You have debited purchase account only. Purchase account debit to cash you have done. Can we touch purchase account if you purchase a capital asset? No. You can touch purchase account only when you are purchasing something as part of your normal business for the purpose of reselling it. When you do this, those purchases should touch the purchases account. If you have purchased furniture, it's a capital asset to you. You are not the seller of it. Furniture account should have debited. Correct? No. But you did purchases account. Now what you did? You applied accounting itself wrong. You know, you treated a capital expenditure as a revenue expenditure, because if you debit purchase is a revenue expenditure. It's an expense account. It will be wrong. So you applied the accounts only wrongly. So these cases it will be errors of principle. All of you understood? Huh? There is one more kind of error called as compensating error. What is compensating error? Compensating error means one error compensates another error. Okay. You will understand compensating errors better when we discuss the next part. Okay, let's discuss the next part and come back to it. Okay. Now, these errors can be further classified into two parts: one-sided error and two-sided error. What is one-sided error, two-sided error? You have to understand. Okay. Let's come back to our discussion on trial balance. Whenever you prepare trial balance, put all the ledger account balances. What should happen? The trial balance should tally. Debit side should be equal to credit side. Yes or no? Yes, sir. But it will not tally. Sometime you prepare trial balance, but it did not tally. Tell me why. We know whenever trial balance will not tally, the balance is transferred to suspense account. But tell me one thing. Why is trial balance not tallying? It's not tallying because generally we follow for all debit, one credit will be there. For all debit transactions, one credit transaction will be there. That means debit should be equal to credit. But why is it not equal? Because at some place your debit and credit is not getting equal. While recording some transaction, your debit was not equal to credit. That's why your trial balance is also not matching. That means very clearly I can say that there is some error, because one debit and credit are two different things. And generally for every transaction, debit should be equal to credit. At some place what you have done is debit is not being equal to credit at some point. That's why your trial balance is not tallying. That means there is an error. Correct? Whenever trial balance is not tallying, pakka there is an error. Now what is this one-sided error, sir? Very simple. Some error has happened, and because of this error, trial balance is not tallying. That means trial balance is not agreeing. Then these errors are called one-sided errors. Some error has happened, and the trial balance is still agreeing. These are called two-sided errors. Sir, what nonsense? What nonsense are you speaking, sir? Just now you told whenever error has happened, trial balance will not tally. Now we are telling two-sided errors are those errors which will tally. Those kind of errors which even after committing will tally and enter. How sir? This is possible. Take example of error of principal only. Now there, instead of furniture to cash, you did purchase to cash stay. That's the wrong thing only. But debit is equal to credita. Trial balance will see debit is equal to credita, not anta. Is debit is equal to credita? Yes, no. So trial balance will still be correct, but still you are committing mistakes. These kind of errors are called two-sided errors, where even after committing the error, trial balance is matching. One more example of the two-sided errors is errors of omission. Errors of omission, what happened? You did not record the transaction itself. Debit 2 illa, 0. Credit 2 illa, 0. Trial balance is still matching. Correct? No? Trial balance is still matching. So this is two-sided errors. That means even after committing the error, if still trial balance is tallying, then it's two-sided errors. So I have given this classification. One-sided error, clear? One-sided, two-sided, and these three things. Now I will come to compensating errors. Now what is compensating errors? Now, for an example, now there was one transaction. I have purchased goods from Mr. Ramesh for 500. Entry should be purchased to Ramesh. How much? Say not 500, I purchased for 5,000. What mistake I did? No. Purchase account debit I have done 5,000 only. But in Ramesh, while crediting in Ramesh's account, it has become 500. So is that an error? Yes. Now tell me, is that a one-sided error or two-sided error? See, one debit and credit is not matching. My criteria is only that much. No matter what you have done. Entry. Debit credit equal, that means it is two-sided error. Debit credit not equal, it is one-sided error. Now see here, debit is not being equal to credit side. So it's a very clearly one-sided error. No, if it is a one-sided error, will the trial balance tally? No, trial balance will not tally. No. Now, please note that one-sided error, trial balance will not tally. Aita? Now, say suppose there was one more transaction with respect to Ramesh only. That is, I have purchased from Ramesh only, maybe. Again, how much I have purchased, sir? I have purchased for maybe, we'll keep it 5,000 only. This time what happened? Same entry I am supposed to cost. Credit purchase. Purchase to Ramesh. Okay. How much I have purchased? I have purchased for, again, 5,000 only, sir, no doubt. Oh, same, you have purchased for 5,000 only, a second time also. Oh, very good. What, Ramesh, you are chikapava? Hala, it's okay. You have purchased for 5,000 again from him only. Here what happened? Again you have purchased for 5,000, but here you debited 500 and credited 5,000. Ulta. First time purchase 5,000 debit madidri. Easily Ramesh 5,000 correct credit madidri. But what mistake did you do? Purchase you have debited wrongly. Ayyo. Now again tell me, this is what kind of error? This is again one-sided error because debit is not equal to credit. Yes, sir. If it is one-sided error, then trial balance will not tally. Correct na, here also TB will not tally. Correct? But now let me draw one small trial balance, okay, only for these transactions. In my transactions, only two accounts is there. Purchase, one account is purchase, one account is Ramesh. Debit to, credit to, small trial balance I'm drafting. Purchase expense will have a debit balance. How much? 5,000 plus 500. The balance will be 5,500. Ramesh, 500 and 5,000 total. Ramesh, the creditor, will be having credit balance 5,000. The trial balance is tallying. Discuss one-sided error, but trial balance is tallying because no, trial balance should not have tallied. Correct your thinking. But what happened? One error compensated another error. Illu one-sided ittu. Illi kadme agittu. Illi kadme agbidide. Error compensate agi in trial balance the error is not being revealed. One error, one-sided error compensated another one-sided error. Because of which TB is still tallying. These are called compensating errors. So compensating errors basically yavago trial balance will be tallying. Understood? Thank you. Thank you very much. Now these are the things which you should understand. Okay. Sir, now you have understood all the different kinds of errors. Then what else you have to know? One more thing that is relevant from ROE point of view is when you are identifying the error, based on that accounting will change. When and all you can find out error. there are 3 stages. One is before preparation of trial balance. One is after preparation of trial balance. One more is after preparation of final accounts. 3 stages are there. Okay. Based on this, our rectification entries also will change. Correct? Now, small example, I will take one example here and I'll tell you what to do. Okay. Both, two kinds of example I'll take for you to understand it fast. One I'll take one-sided error and one more I'll take two-sided error. Okay. So first I'll take two-sided error. Hey, I know the spelling of error, appa. Hello. So, which error to take? I'll take purchase of building. This is a capital asset. Pass through purchases account. Iday ನೀವು ಮಾಡಿರುವಂತ biggest blunder, mistake, everything. Okay. Sir, what is the mistake, sir? Sir, first tell me which kind of error is this? See, building is a capital expenditure, no? Why are you putting it to purchases? So you are committing error of principle. Okay. That is the error. Sir, how to rectify? Sir, now to rectify, we follow this step. Follow. Focus. First, I'll write what should have been the correct entry. Okay. Sir, what should have been the correct entry? Since I purchased building, correct entry should have been building is an asset increasing debit, 2, cash is an asset decreasing credit. This should have been correct entry. Then I will write what is the actual entry that they have done. Nonsense people, what they have done. Actual entry what they have passed is they have passed it through purchases. So purchases account. Okay. How much? Say it is 1 lakh. Now what I will do in rectification entry is, I'll see. In correct entry, building should be debited, cash should be credited. But in actual entry, only cash is credited. So in correct also cash is supposed to be credited. Actually also cash is credited. So should I touch cash account? No, it's already correct. Leave it now. Now come to building. Building should have been rightly debited. But is it debited? No. Debit the account that is supposed to be debited. Building. I will debit building because it's supposed to be debited. No. That's the correct entry. But what is actually debited? Purchases. Purchases is the wrongly debited account. Reverse. Credit it. To అర్థమైందా నాయనా? అయ్యో 1 lakh. Something has happened to my iPad. Give me 1 second. Suddenly this happens. Okay, so that is a rectification entry. That's how we approach correct entry, actual entry, rectification entry. Now I told rectification entry changes based on when the error is identified. Before trial balance, after final accounts. After final accounts and final accounts and the balance sheet and P&L is prepared for this year. That means you have found out the error in the next year. Next year, the 2 after final accounts is closed. Closed and can you make any rectification in that year? No. Next year only you have to do the rectification. And then next year books only. Okay. Now, it's a two-sided error. So in before trial balance, the rectification will be like this one. No changes. Okay, so that's super simple. Double-sided error, very simple. Sir, after trial balance and so what? Same thing. Same rectification, no change only. Arey? Wow. After final accounts, sir? After final accounts also same, no change only. Arey, wow. Sir, double-sided error is very nice. Hey, one thing, in double-sided error, at 3 stages also rectification entry will be same only, but one small change comes in after final account. In after final account, what you have to do? No. In rectification entry, if there is any nominal account, you have to replace that nominal account with P&L adjustment account. Sir, why? As I told you, in after FA, rectification is happening in the next year. Alva? For example, this is our rectification entry. Correct? See here, we have purchases account. Purchases is a nominal account. Aita. Say suppose this error I am finding out in next year and the after final accounts. In the next year books, if I credit purchases, then next year purchases will be hampered. Next year profit will be hampered. No, no. Next year will consider an error na. ಆ ಇಯರ್ ಅಲ್ಲಿ ಎಂಟ್ರಿ ಪಾಸ್ ಮಾಡ್ತಾ ಇದೀನಿ ಅಲ್ಲಿ ಪರ್ಚೇಸಸ್ ಅನ್ನು ಕ್ರೆಡಿಟ್ ಮಾಡ್ಬಿಟ್ರೆ ದಟ್ ಇಯರ್ಸ್ ಪರ್ಚೇಸಸ್ ವಿಲ್ ಬಿ ಅಫೆಕ್ಟೆಡ್ ನೋ ಪ್ರಾಬ್ಲಮ್ ನೋ ದಿಸ್ ಇಯರ್ಸ್ ವಾಸ್ ದ ಪ್ರಾಬ್ಲಮ್ ಸೊ ವಾಟ್ ಐ ಡು ಐ cannot touch purchases then what I do sir instead of that nominal account this rule is applicable only for nominal account instead of that nominal account you will replace it with P&L adjustment account only nominal sir where in rectification entry so if you find out error after final accounts then in the rectification entry, if there is a nominal account, that nominal account should be replaced by P&L adjustment account. Did you all understand the matter? Yes, we can go even more deeper with all these concepts, but thing is, it's a revision video. It's only for revision purpose. If you want full-fledged classes, then contact Success Edge Academy or iProledge Academy. You can see the logo. Okay, contact them. Let's meet. Let's understand accounts in a very crazy manner. Let's have lots of fun and yeah. Okay. So did you understand? So one thing what we understood is for double-sided error, at all the 3 stages, entry will be same. Only after a phase it will change a little bit. Okay. Instead of nominal account, we use P&L adjustment account. Okay. Understood? So double-sided error is not a problem only. So then what is the problem there? See, the problem is single-sided errors. I'll take one single-sided error example. What single-sided error? Purchases from Ramesh was wrongly debited. Okay. Now let's take the example of this. Guys, for ROE, I will tell you one assumption. This assumption forms part of the base of this ROE. Okay, most of the students fail to understand this, but try to understand. If you understand now, you will crack the code. The code is, the assumption that you should always know is, in the error, in the question, there will be error description, no? In error, if they tell, this is what has, this account has, something wrong has happened with respect to this account, and then error depends on the different questions. I'll tell you, I'll give example with this only. Something wrong has happened with respect to a particular account. What should be your assumption is, only that particular account is wrong. Anta. You should not assume anything else for the other account. Please and try to understand this. Okay, I'll give an example. If they have told if a particular account is wrong, then only that account is wrong. The other account which is concerned in the journal entry has been posted correctly only, has been posted correctly only, has been posted correctly only. Anta artha. Aita. Idondu artha madkobitre. If you get this logic, no, ROE will be very simple. Rectification of errors. Now I'll try to tell you what I just told. Okay. Now see, purchases from Ramesh was wrongly debited to his account. Now you know how we try to approach this. First I'll try to give a normal rectification entry, then I will give what to do if the errors are identified at different stages. First, what is the correct entry? Correct entry is for purchases from Ramesh. You have credit purchase, okay? Credit purchase you have done. So correct entry should be purchases is an expense increasing debit. To Ramesh is a credit or increasing credit. Okay. How much, sir? Maybe 1 lakh. Sir, what you like 1 lakh number? ऐसा कुछ नहीं. It's coming like that. Okay. So purchase account debit to Ramesh 1 lakh, 1 lakh. Okay, done. Next. what is the actual entry that they have passed? This is the correct entry, purchase to Ramesh. What is the actual entry? What error they have committed? Purchase from Ramesh was wrongly debited to his account. Ayyo, if you see the correct entry, Ramesh account is supposed to be credited, but nonsense people, they have debited. So Ramesh account is debited. Okay, sir. Okay. Then what students make mistake? No, what they do is, sir, Ramesh is debited. Andre mostly purchase is credited. Aye, e mistake ne ಮಾಡಂಗಿಲ್ಲ. ಇದು ಬರೀ ನಾನು ಈ ಎಕ್ಸಾಂಪಲ್ ಹೇಳ್ತಾ ಇಲ್ಲ, generally also. They spoke only about Ramesh in the question. Purchases from Ramesh was wrongly debited. ಅಷ್ಟೇ. Ramesh ಬಗ್ಗೆ ಮಾತಾಡಿರೋದು. Purchases ಬಗ್ಗೆ they have not told. That means our assumption should be purchase account is posted correctly ಅಂದ್ರೆ purchase is also debited. Areva? Sir, like this and all they'll pass up. This is the effect, okay, not the journal entry. Effect has happened like this. So 2 sir, 2 nothing. 1, 2, both they have debited. 1 lakh, 1 lakh. Oh. Now you tell me, by looking at the actual entry, is it a single-sided error or a double-sided error? Is debit equal to credit? No, debit is 2 lakhs, credit is nothing. Of course, debit is not equal to credit. It's a single-sided error. Okay. Now how to rectify this, sir? Okay. Now rectification depends on where we are identifying the error. So 3 places. First, before even preparing trial balance, I am rectifying this. Aita? Now how will I rectify? Now what happened? Let's analyze. Purchase is to be debited. In actual entry also purchase is debited. So purchase account I will not touch. Ramesh account was supposed to be credited, but Ramesh account is debited. So what am I supposed to do? I am supposed to credit it to Ramesh. It should be credited, no papa. They have debited. Sir, it should be credited for how much, sir? 1 lakh, Hey, 1 lakh is the right credit, but it is wrongly debited, no? Wrongly debited na, first reverse ಮಾಡಿ. ಆಮೇಲೆ rightly credit ಮಾಡಿ. Effect becomes twice. From negative to positive. Say you are in negative 2000. You have to go to positive 2000. So negative 2000 in the positive 2000 go, okay? What is the difference? 4000, no, double. Like that. Wrongly debited. I have to rightly credit it. So first reverse the wrong debit, then actually rightly credit. ಎರಡಕ್ಕೂ credit ಆಗುತ್ತೆ. So you have to credit Ramesh account not for 1 but 2. When will this double effect come? Whenever account instead of getting credited is wrongly debited, or instead of getting debited wrongly credited, the effect will generally become double. Note that. So Ramesh should be credited for 2 lakhs. Yes, sir. You did it. Next word, sir. One more purchases will have put a 8. Purchases is also correct. No, actually also purchases should be debited. And it's already debited also. Why will you touch purchase? If you touch it again, something else will happen for purchase now. No. Purchase I cannot touch. Then what to do? Think, comment, which account should I use? We are before trial balance. The problem is, we cannot use any account. Huh? Sir, we cannot use any account. Then it will not be journal entry only, no, sir? Yeah, but please understand one thing. It's a one-sided error, no? Andre tappu bari onde kade matra agide. The mistake has happened only on one side. That's why it's called one-sided error. How can you correct a one-sided error? By using a two-sided journal entry. How can you correct a one-sided error by using a two-sided journal entry? 100% not possible. Correct? Huh? Not possible. I know, it's not possible. So what to do, sir, then? What you can do is, you cannot do anything. You have to just leave it like that. To Ramesh, ashte. While posting, when you go to Ramesh's ledger, since Ramesh account is credited, in the credit side of Ramesh, you have to post it. Sir, what? No account only. Write the reason, no? Account wrongly debited, rectified. Ante ಏನೊಂದು ಬರೀರಿ. Sir, it's account. Hey, it's not an account. I don't have anything to put there only. I've just written the reason itself. Understood? This is the problem with one-sided error. A one-sided error cannot be rectified with a two-sided journal entry. Correct? So this is the situation. So if you find out this error before trial balance, this is how you rectify. Just credit in Ramesh account by putting that reason. Sir, after trial balance, what to do? See, after trial balance, I would have prepared trial balance. Since there is a one-sided error, trial balance would not have tallied. Since trial balance would not have tallied, suspense account would have created. Suspense account is now I have an account to use. This problem I don't have. Because of all the the reason my trial balance did not tally is one-sided error. And that difference I put in suspense. Now I have an account to use. Now, instead of this, I will use that suspense account if the error is identified after trial balance to Ashtik. Wow, sir. Sir, what if we find it out after final accounts? After final accounts, same. Trial balance will be there now, even after final accounts. And the trial balance is already prepared. So, this entry only. But you should not forget our rule. Correct, no? If in rectification entry, if you have any nominal account, then instead of that nominal, we'll use P&L adjustment. Here we don't have. Ramesh is a creditor guy. Suspense is not a nominal account. We'll carry forward the balance. It's like asset or liability account. Okay. So both are not nominal accounts. Even after final account, this entry will be same. But if at all, if you had any nominal account here, say it was suspense to purchase, then instead of purchase, I would have used suspense account debit to P&L adjustment account. That rule remains same. I hope you have understood it better. Please don't forget about the default assumption. If about something they have told, only that account is wrong, the other account is correct. While doing some more problems, I will re-emphasize this point. Don't worry. Understood, ladies and gentlemen? So I think we have discussed with the first chapter. I think all of the important things is covered. Now let's solve all the relevant MTP, PYP questions, whichever is nice, interesting. And we'll go to the next part. Clear? All of you? Let's go. So let's solve some questions based on whatever we have discussed. Let's refer previous year question papers also. We are referring December 25, the latest question paper, and June 25, okay? And then we'll be solving some questions from the recent model test papers also, okay? So I'm taking June 2025 paper, okay? So first one, it's about AS10, okay? So we'll discuss it when AS10 comes. Second one is about depreciation, okay? So what it is, ABC Limited purchased a motor vehicle costing 70 lakhs on 1st April 2024. The major components of the motor vehicle consists of main body costing 20 lakhs. So if you see, the motor vehicle they have given breakup for the motor vehicle parts. First they have main body, next they have seating arrangement and furnishing cost, and then they have engine, okay? So they've given the breakup. 20 lakh is main body. Then seating arrangement is 30 lakhs. Then engine is 20. Okay. Now what has happened is all the three items are there in one motor vehicle only. But main body has a useful life of 5 years. And seating unit has 6 years useful life. And engine has 10 years. Compute the depreciation for the year ending 31st March 25. This is about component accounting. Okay. Now tell me, just because motor vehicle is one, should I take the entire 70 lakh and divide it by 5 years? Because it's the main body. Does that make sense? No. Seating unit can come for 6 years. Engine will come for 10 years. So after 5 years, what will I do? Or maybe say, can I take entire 70 lakhs and can I divide it by 10 years? Can I spread it over 10 years? That doesn't make sense, no. Because after 5 years, you will change the body. After 6 years, you will change the seating unit. Correct, no? Now, when each of the components within the motor vehicle has different useful life, use the respective useful life and compute depreciation. No, that should be better presentation rather than taking 170 lakh amount and taking one useful life for one component with its engine. That will not give you fair depreciation. When you have separate breakup and when you have useful life for the respective items, then that should calculate. Then that way, use calculating depreciation separately for each component will give the fair depreciation. Correct? No, because after 5 years I will not be using no main body. I will change it. Why will you amortize it for 10 years? No matching. Matching concept is not matching. No, you cannot just take any one. You cannot just take 10 years just because engine is coming for 10 years. So how to calculate depreciation? Very simple. Okay, very simple. So 20 lakhs divided by what is the useful life for main body? It's 5 years. So this comes to 4 lakhs. Then seating unit is 30 lakhs divided by useful life of seating unit is 6 years. So this comes to 5 lakhs. And next one is engine. Engine is 20 lakhs divided by, what is the useful life of engine? Engine useful life is 10 years. That comes to 2 lakhs. Okay. So add all the three. 4 lakhs plus 5 lakhs, 9. 9 plus 2, 11 lakhs. 11 lakhs is the depreciation that you have to charge for the year ending 31st March 2025. Okay, they just asked to compute depreciation, nothing else. So you have computed depreciation is 11 lakhs. Correct? So that should be it. And you are getting how much here? So I think including both you are getting 7 marks. Okay, okay. Good now. Aram question. Aram say you can do it. Okay, next one. Next we have rectification of errors. Correct? No? We have discussed ROE. So let's see this. Credit sales to Barun 7,000 was recorded as 7,200. Correct? So you know the way we solve questions for this is like we have 3-step approach. Correct? No? That's how we rectify errors. Credit sales to Barun 7,000 were recorded as 7,200. So what is the correct entry? Credit sales to Barun 7,000. So correct entry should be Barun account. Barun debtor, asset increasing debit to sales. So it should come to 7,000. 7,000. This should have been correct entry. But actually what they have done, nonsense fellows. They have recorded it as 7,200. They have done Barun account to sales account only. Papa. So, but they have recorded it as 7,200, 7,200. So what kind of error is this? This is error of commission. Silly mistakes, correct? No, it's error of commission. Now how to rectify this? Barun should be rightly debited, is debited. Sales should be rightly credited, credited. But what is the problem? It is under debited and under credited. So, sorry, it's over debited and over credited, correct? No, it's more by 7,200. This is 200. This is more by 200. Now what I have to do? Reduce sales also by 200 and reduce Barun also by 200. Sales is an income, reducing debit. So sales account to Barun is an asset, decreasing credit, Barun account. How much? It's more by 200. So just pass 200, 200. You have rectified the entry. That's all. Simple. So this should be the rectification entry. Next, credit purchase from Raman 9,000 was recorded as 9,900. Again, very simple. Correct entry should be purchase to Raman. Correct? No, purchase expense increasing debit, Raman creditors increasing credit. So it should have been 9,000. Okay, they have recorded it as purchase to Raman 9,900, 9,900. Same thing. I have to reduce both purchases and Raman by 900. So Raman debit, because Raman is a creditor, decreasing debit. To purchase an expense, decreasing credit. To purchase, it's more by 900, 900. Henceforth, we have rectified the entry. Raman to purchase 900, 900. Okay, next. Goods returned to Chaya 4,000 was recorded as 4,040. So again, first, second, third. So what is the correct entry? Goods returned to Chaya. Andre, it's purchase returns. Correct? No? Purchase returns is increasing. So what you have to do? Credit purchase returns and debit Chaya. Chaya is a creditor. Her liability is decreasing. Debit because we are returning the goods. So Chaya account debit to purchase returns account was supposed to be 4,000, 4,000. But actually what has happened? They have recorded it as 4,040 on the same entry. Chaya account debit to purchase returns, but it has become 4,040. Correct? Recorded as 4,040. Now it is more by 40. No, both Chaya account is more by 40. Purchase return is also more by 40. So rectify. What to do? Purchase returns to Chaya account debit 40, 40. Correct? No. Now we have corrected the mistake. So next one will be goods returned from Paresh 1000 were recorded as 1500. So it's sales return. If this kind of question comes to in an exam, no, please pray to God first and then you start doing, because he has made the paper easy for you. Correct? Now sales return, what is the entry? Sales return debit. Sales return debit to क्या है भाई ये? Sales return debit to Paresh. Correctly, what is the amount? Correctly, the amount is 1000. But what have we done? We have done a mistake. We have recorded the same entry as 1400, 1400. It's more by 400. So rectify. So Paresh is credited more by 400. So debit to reduce the effect. Paresh to sales returns 400, 400. So that's how we have rectified the entry. So I hope you have understood now. Everything is very similar. So what happened here? The fourth case, sales returns is debited more by 400. Paresh is credited more by 400. So Paresh should be reduced. Paresh is a debtor. Sorry, Paresh, actually he's been credited more. So that I have to reduce that credit. So I will debit. Paresh debited by 400. Sales return is debited more by 400. I have to reduce. So I will credit it. Okay. I hope you have understood. Done. So can we go to the next question? I think that should be easy. No problem. Next. Then this is the question from insurance. Then we have branch. Then we have branch only. Then we have. I think that's all from here. Correct? No. Next all is partnership and other stuff. Okay. Done. So let's go to December 2025 paper. So any peculiar question here do we have? No, it's all we have to discuss later. The same question, if you see, we have it in our ICMA study material also. Correct? So this PDD, anyone who wants me to discuss, let's discuss. It's a good question. Many times they'll ask. The provision for bad debts opening is 14,000. So we did it very recently, no? Just now. So let's apply our knowledge. Opening provision is 14,000. During there, there's a bad debt of 9,400. And the debtors on 31st March 2025 were 3,25,000. So it's the closing debtors. That means the effect of bad debt is already given to that debtors. Which bad debt I'm talking about? That 9,500. That's why the balance is that on 31st March. See, they have told that sundry debtors is the balance as on 31st March 2025. And the closing. Closing balance adu andre, that means they would have already passed this bad debt entry. Provision is to be made for 5%. If on 31st March 25 there was still additional bad debt of 2,500, then the provision for doubtful debt will be debited to P&L. So how to determine? How much is your opening provision? 14,000. What is your bad debts that has happened in current year? 9,500 minus 2,500. So it's 10, 11, 12. So remaining balance will be 2,000. Correct? Now 14,000 provision you had. 12,000 you have hit it to provision only. So you still have, now you still have balance of 2,000. This 2,000 you have to take it where? See, they are telling the provision is to be made at 5% on debtors. So what are the debtors we have? We have 3,25,000 as on 31st March 25, but we further have bad debts. No, this 9,500 is given effect. Okay, that's why closing balance is 325. But there is still additional bad debt of 2,500 which they have not taken into account. So that I will further subtract. So what would have happened? 3,22,500 is the balance of debtors after considering the additional bad debts also. Now this is the ultimate number. On this I determine my closing provision amount. So what is my closing provision amount? It's 3 lakh. It's 3,22,500 into 5%. So I have to maintain it at 16,125. Correct? My closing provision should be 16,125. 125, but I already, right now, my opening provision has become 2 because I've hit the bad debts. So from 2 I have to take it to 125 and I have to increase my provision. To increase the provision, P&L account should be debited by how much? From 2 to 16125. I have to travel 14,125. So debited to P&L, answer should be B. Clear? All of you understood? Opening provision, bad debts effect has gone to provision, so provision decrease. From that provision, I have to take it to the provision amount that I have to maintain. If you have to increase the provision, P&L to provision account. If you have to decrease the provision account debit to P&L. This we have discussed, correct? No? So yeah. Next, what is relevant? Let's come here directly. DRS. Oh, no. So we have our favorite DRS question. Let's do it. On 31st March 2025, Sandeep's cash book showed a bank overdraft. Guys, here we have a bank overdraft. Whenever we have overdraft, just put negative in the solution and start doing. No, why take tension? So it's overdraft, negative balance. Where? In our cash book. On comparing with the passbook, they have given us a difference. Okay. You are supposed to ascertain the amended cash book balance on 2025 and then also prepare BRS. We discussed, no. When will amended cash book come? Anything which we can rectify, we'll rectify those error differences in cash book only. Only remaining will correct it in BRS. And generally we know only 3 items will come in your BRS. That is check issued but not presented, check received but not deposited, and errors made by bank. These 3 things will generally come. So let's first classify as to which will be corrected in ACB and which will be corrected in BRS. I mean, will be mentioned in BRS. First two, cash and checks amounting to 26,800 were sent to bank on 27th March, but checks worth 4,600 were credited on 2nd April. So we are preparing BRS for 31st March 2025. Okay. And one check for 900 was returned by them as dishonored on 4th April. So understood? So 2 things are there here. One is what happened? No. You had sent some checks to bank when on 27th March. Okay. Out of that 26,800 worth checks you have sent. Out of that, 4,600 worth checks was credited after the BRS ending period. BRS ending period is 31st March. Okay, 4,600 came after BRS ending period. About 900 also came to know after BRS period. So, 4,600 also later, 900 also later I came to know. Okay. That means remaining out of 26,800, that checks has been cleared much before the BRS period itself. Now tell me, the items which came after the BRS period will be causing difference. The item which came before the BRS period will be causing difference. Of course, no. If items which come before the BRS period get settled there only, differences will not be there. But the items which come after BRS period, that creates difference. Okay, now that is 4,600 plus 900. So it's like check received but not yet presented. How much? 5,400. We have an exact question in our ICAI study material also. Okay, so 5,400 is the cause of difference, and it's a BRS difference. No? So this will be corrected where? In your BRS only. Okay, next. During the month of March, Sandeep issued checks worth 33,400 to his creditors. Out of these, checks worth 27,400 were presented for payment on 5th April. It's checks issued but not presented. Correct? No? I have issued 33,400, but checks worth 27,400 were presented for payment on 5th April. And the remaining of 33,400 minus 27,400 is the remaining. Okay, how much? 33,400 minus 27,400. And in remaining 6,000, what has happened? 27,400 is presented in 5th April, next month. That means 6,000 is presented within the March only, within the BRS ending period only. Now tell me, 6,000 will be the cause of difference. 27,400 will be a cause of difference. Which happened after. Whatever happens within the BRS period, it gets corrected, don't worry. So 6,000 comes within, no, don't worry. But 27,400 is coming after. It was presented for payment after the BRS period. The cause of difference will be 27,400. And we know that it is checks issued but not presented. It will be corrected in BRS. It's a banking timing difference mistake, okay? Then according to Sandeep's standing orders, the banker have made the following payments during the month of March. Standing orders. That means what? You told the bank to auto deduct the money, they have deducted. What all? Life insurance premium and television license fee. Okay, they deducted. You should have recorded it. Can we record it at least now? Yes, no. Once after seeing the statement, I can record it. Why bring it in BRS? So this will be corrected in adjusted cash book only. Okay? Okay. Sandeep bankers have collected 3,000 as dividend. Bankers have collected the dividend and they have put it to my bank account directly. Since they have put it directly, I didn't know. But can I rectify it by recording now? Yes. Then the rectification happens in ACB. Interest is directly deducted by the bank. Okay. Now I came to know. Can I record it and adjust? Yes. So it will be adjusted in ACB. A bill receivable of 2,000 discounted with the bank in February. So there's one bill receivable. We got it discounted from the bank on February 2025. But that got dishonored on 31st March 2025. Our BRS period 31st March. So what would have happened when bill receivable gets dishonored? Say suppose I am the drawer. For me it is bill receivable. I had gotten it discounted and I got the money. My drawee was supposed to pay money to the banker, but he did not pay bill receivable. Got dishonored. Now who should pay? I should pay, no? So bank will automatically deduct my 2,000. Okay. I didn't know. When I come to know, can I adjust it? Yes. So this also will be corrected in ACB only. Okay. Only I think 2 entries will come in BRS. Okay. So let's fast prepare amended cash book. So cash book has an overdraft balance, correct? No. So cash book. So where will the opening balance come? Since it's overdraft, generally cash book as an asset will be having debit balance, but since it's overdraft, balance comes in the credit side, negative balance. So buy balance brought down, how much? किधर है भाई? It is 2,50,000. Okay. So please be very careful. If it's overdraft balance in cash book, comes in credit side here. If it's positive balance, comes in debit side here. Okay. I mean normal balance. Now what to do? Cash book receipt under debit side barata, payments under credit side barata. Okay. Now focus. Let's adjust all the cash book adjustments now. So this one. What would have happened? Standing orders. Hold your hands. This is cash book and this is passbook. Okay. My left hand is my cash book. For you, your left hand should be cash book. Now money has directly been debited from the passbook. So money will be less in passbook. But in cash book, we have not passed the entry. Now that we are doing BRS from cash book angle. Sir, cash book angle andre? We started our BRS from what? From cash book, no. We are doing amendment where? In cash book, no. That means we are doing BRS from cash book. So your passbook is less. Correct? No, your cash book is more. We are doing BRS from cash book angle. So I have to make it equal. So I'll reduce this. See, I hope you understand. Those who are not getting, I'll tell you. Cash book, passbook. Okay. Our intention is always to make this equal. But what happened here? Since the money is automatically deducted by the bank, passbook became lesser and cash book is more. Now, for me to make this equal, either this can come here or this can go up. What should I do? Since I am doing the entries in cash book, I can alter only my cash book hand. Or sometimes if you are doing normal BRS statement, then if you are starting your BRS from cash book, then you can alter only cash book. You have to see from where you are starting. We are starting from cash book. So this only I have to reduce. So reduce under minus, up under add. So here I am reducing. So here what I will do? I have to reduce minus. Now when you are doing the amended cash book, all the pluses will come in debit side, receipts. All the minuses will come in credit side. Here it's minus, no. So I'll write by, what was it? By life insurance premium, $3,840. Then by television license fee, by television license fee, how much? It's 2,004. Okay. So minus alwa. So I have to reduce it from cash book as well. Okay, done. Next. Sandeep bankers have collected 3,000 as dividend. Okay, what has happened? Since directly money has come to passbook, your passbook will be more, cash book will be less. We are doing that from cash book angle. I'm supposed to add. That means it comes in debit side. 2. What is it? Dividend, no? How much it is? 3,000. Next. Interest charged by the bank directly, so passbook is lesser, cash book is more. We are doing bears from cash book angle. Subtract, I'm supposed to minus, comes in the credit side. By interest, how much? It's 2,500. Next entry. A bill receivable dishonored alva, so money will be directly deducted from my bank because my dry did not pay, so money will be less in passbook. Okay, cash book will be higher. Now I'll record it. Now since we are doing bears from cash book angle, I have to reduce, so minus should come in credit side only. Ayo, ella credit ena. So by so by debtors account. Why debtors account comes here? Once you understand BOE, you'll understand. Bills receivable discounted dishonored. What is the entry? Think about it. Debtors will come back to our books. So debtors will come. Okay. So amount is 2,000. If at all discount was there, the discount amount also we should add here. Correct? Now along with discount, it will be deducted. Okay, 2,000. Only not the net amount. Now say value of the bill is 2,000. Bank would have deducted discount and suppose it would have given me 1,900. But again, when the dishonor happens, bank will deduct how much money from my bank account? Entire 2,000, not only 1,900. So if discount is there, consider that also. Net plus discount, you have to take gross only here. Gross will be deducted by the bank. Okay, not the net which is given to you at the time of discounting. Okay. Now I have adjusted. So once you have adjusted, take the balance. So of course it will be having credit balance only. So what is it? 2,50,000. Then we have 3,840. Then we have 2,400. Then we have minus. So it comes to 2,57,740. So that's your amended cash book balance. Okay. Now when you start the BRS, you start with that balance. Okay. BRS balance as per cash book. How much? It's 2,57,740. Now tell me, is it a favorable balance or unfavorable balance? See, it started with credit balance. Till now it has credit balance only. Okay, see, credit side is only greater than debit side. That means it's a unfavorable balance. Cash is an asset. So favorable balance becomes debit balance. Still, if I am getting credit balance, then we have overdraft only. So what I'll do, if it is overdraft, I'll start my BRS with a negative number. So negative 257,740. Just put it as negative overdraft balance. Athwa negative balance. And do your add or minus normally now. So we have only two BRS items. Correct? Now what are the two BRS items? One is your checks received but not deposited, 5,400. Check received but not deposited. And the cash book will be more, passbook will be less. We are doing BRS from cash book angle. So I have to reduce it. So I have to do minus. So minus. How much it is? It is 5,400. Negative only. Next. Then Sandeep issued checks. But this is check issued but not yet presented. Check issued but not yet presented. And when you issued the check, you have recorded in cash book. Cash book is lower, passbook is higher. We are doing BRS from cash book angle. I'm supposed to increase it. So add. So I have to do plus. What is the reason for difference? 27,400. So add check issued but not presented. So how much that would be? That would be 27,400. That is the cause of difference. I hope you understand how to find out the cause of difference. Whichever comes within period, no, there will be no difference. Within BRS period, what will be the difference? So, say suppose within the BRS period, if the difference is created and reversed, then no need to prepare BRS. Ultimately, by the end of that period, it will be matching. Correct? No. For example, we are in January. We are doing BRS for January. One check was issued on 15 Jan. Issued. And it was presented by the creditor on 19 Jan and it got debited also. So, when you are preparing the BRS for Jan month, see 15th difference created, 19th it got resolved. By 31st Jan, difference will be there. No, difference created and money is also debited from the bank within the same month, so difference will not be there. But say suppose I issued a check on 29th Jan and it got, and he presented it later and the money debited from my bank account on 3rd Feb or 4th Feb. Now when I am preparing BRS for 31st Jan, difference will be created because the money has deducted from my bank account the next period. So here 27,400 was presented in the April, next period. We are preparing BRS for 31st March. Next period bartaro karana, then all the other checks, of course difference will be because of 27,400. Remaining maybe is cleared now only. Okay. So that cannot be cause of difference. So what happened? 257,740. Okay. So further we have to minus 5,400. Correct? Then add 27,400. So it becomes 2,35,740. So that becomes the balance as per passbook. Okay. So what? Still overdraft balance? Yes, no, we still have negative number only. So it's overdraft balance. Overdraft balance as per passbook. Yeah. Okay. So we are done with this BRS problem. Next, they have given us classification of capital expenditure, revenue expenditure. So fast you'll see an extension of railway tracks in the factory area. Correct? No. You have a factory area. So putting railway tracks in front of the factory area so that trains can directly come to your premises and they can take the items. Of course, what it is? The railway tracks now becomes a fixed asset only, no? Correct? It's railway. So it's a capital expenditure and the benefit that I'm getting from railway tracks is of course more than 1 year. What, you'll build tracks only for 1 year? Of course, from tracks you'll get benefit for more than 1 year. It's a capital expenditure. Wages paid to machine operators. It's like normal salary, no? You're giving labor money to operators. They're operating. It's what? Normal revenue expense. It's normal wages, no? What, you're getting benefit more than 1 year? It's fixed asset. No, they're just operating it. It's like salary. Revenue expenditure. Installation cost of new production machine. It's capital expenditure. Why? Because I told no. What did I say? Any money incurred on the new fixed asset plus directly attributable expenses till the asset becomes ready to use will be treated as capital expenditure, anta we discussed. Henceforth, this installation is directly attributable till the asset becomes ready to use. Hence, it is capital expenditure. Materials for extension of foreman office. If you are extending the foreman's office, then what is happening? You have more fixed assets coming into the picture, correct? No, so it will be treated as capital expenditure, and the benefit from the extension will be more than 1 year. Rent paid for the factory is a revenue expenditure because rent will be paid every month. Benefit is generally for less than 1 year, not for more than 1 year. Payment for computer time to operate new stores and controls. So there is some new inventory control software. Okay, so I have given some money to operate that software. Computer time. Okay, what is that? A capital expenditure? No, computer time. It's an expense, normal. Correct? No. You're just using it. Okay, there's no efficiency that you're getting it out of that expense. Correct? No, you're just using it. Like you can take best example is that operators. Operators are just operating the machine. No, how come it will become capital expenditure? What efficiency is increasing if they're operating? Similarly, here also they're operating computer. Okay, they are paying for computer time because they are using software in that computer only. So that also is not a capital expenditure, it's a revenue expenditure. I am not getting any benefit for more than 1 year or something, and it's a recurring expenditure. And there's no efficiency and all is increasing because of computer time. I need computer to operate software, that's about it. Wages paid to own employees for building foreman's office. Now building foreman's office, capital expenditure. Any associated directly attributable expenditure with respect to acquisition or construction of the fixed asset will be considered as capital expenditure. Now, wages paid is for the purpose of construction of fixed asset, which is the building, and henceforth will be treated as capital expenditure. All of you done, huh? Done, 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 done. So I think that should be all of it. Okay. Let's see some model test papers. Which is this June 2025 model test paper. So let's see June 2025 model test papers. Okay. So let's see this one, okay? It's June 2025 model question paper set 1, okay? Any relevant question? A resource owned by the business for the purpose of using it for generating future point is known as asset, guys. 100% it is asset. Then original cost of machine is 1,50,000, residual value is 10. This is the cost. And if depreciation is charged at 10% per annum under WDV, what will be the depreciation for third year? So take this cost, always percentage should be applied on cost only. So into 10%, it becomes 15. Next it becomes 1,35,000. And that this becomes 15,000, no? So 1,50,000 minus 15, 1,35,000. Again 1,35,000 into 10%, it becomes 13,500. Okay. So it's 1,50,000 minus 10% minus 10%. So it becomes 1,21,500. Again 10%. If you do, you'll get 12,150. So third year depreciation will be 12,150. Okay, that should be simple. Oh, again we have. See guys, did you observe a same exact question which we did now in December 2025? See, they have given it in June 2025 set 1. Same exact question, no? That's why you have to solve questions from various sources. See, same exact question. No, I don't think they have even changed the numbers, guys. Same thing, see? Okay, same question just now we have done. Next. Here, next we have rectification of errors. The books of accounts of A company for the year ending 31st March 24 were closed with a difference of 21,510 in books carried forward. Okay. The following errors were detected subsequently. Now what they are telling here, tell me. Closed with a difference andre, they prepared trial balance, okay. But trial balance did not tally. It had a difference of 21,510. That they would have of course transferred it to suspense account. That's what we do now. We transfer the difference to suspense account. Now they have discussed the errors. Let's see what it is. Return outward book. And we are talking about purchase returns, correct? No. I think we have a similar question in the books also, I guess. Okay. Return outward book was undercast by 100. Okay. So return outward book was undercast. That means the total of return outward book and the purchase returns book was maybe 10,000, but they have taken it as 9,900 under cost, under totaled anta ankobodu. And that only they have posted it to the respective ledger. Which ledger? Purchase returns. There are two kinds of ledger will be affected in that subsidiary book. Purchase return account should be affected. Creditors, because only credit purchase returns will come under purchase returns book. So these two ledgers are concerned. I have told you, one assumption with respect to ROE. If they have spoken about purchase returns book was undercast by 100, and then they are talking about purchase returns total. Are we talking about creditors total also getting wrong? No. The creditors posting and everything has happened correctly. Only thing is purchase returns total became wrong. Creditors posting is correct only. So what happens in purchase returns? I'll take the entire purchase returns total, post it to purchase returns ledger credit side. And creditors individual total I will take, post it to individual creditors ledger in debit side. This is how I post some subsidiary book directly to ledger. So creditors posting individually, that has happened correctly, but purchase returns posting total to purchase return account credit side has happened wrongly. What has happened? They have considered 100 less purchase returns. So how to rectify? So it's by now you would have understood it that it's a single-sided error. Correct? So rectification entry. What will be rectification entry? Purchase returns is what? Under cost and considered less. Have to increase it by 100. So purchase returns increasing should be credited. So to purchase returns and have to increase it just by 100. And debit what? It's a one-sided error. No, you cannot correct it by a two-sided journal entry. So you have to use your suspense account because difference is already transferred. So you can use suspense. If this error was found out before trial balance, then I did not have any account to use here. I would have written the reason and I would have proceeded. But here, we have suspense account to use after trial balance because suspense account is created because of one-sided errors. So whenever I'm rectifying, I can use suspense account for the rectification. We've discussed very detailed, just before. This is the rectification entry for the first one. Next. Then 1,500 being the total of discount column on the credit side of the cash book was not posted. Discount column of the credit side represents discount received, which should be totaled and should be posted in discount received ledger account credit side because it's a income. But did they do that? Was not posted. That means I have to post it. So discount received is an income, should be credited. So entry 2, discount received should be credited. Okay, I'll do one thing. Okay. So entry will be second one. It will be 2. Rectification entry will be what? Discount received is not posted only. Okay, it's like commission. Record it now, no? Discount received, income increasing, debit 2. Discount received 100. Debit what? Debit, it's a one-sided error. Sir, why? Discount received total is not posted. The other aspects are correct only. That is the basic assumption which forms part of the basics of ROE. That means the other parts are correct. Since it's a one-sided error and it is happening after trial balance, I will use suspense account debit. Discount received only, they have not posted pop. Correct? Now when they post, it is increase, income increasing, credit, debit, nothing is there. The other aspects have been posted correctly. Next, 6,000, the cost of purchase of office furniture was debited to purchase account. Wrong. So if you have to do it in our way, correct entry is what? If you purchase furniture, then it should be furniture to cash. But actual entry what you have done, you have debited to purchase account. What? Your business is purchase and selling of furniture, sir, to debit purchases. No, it's my capital asset. So should have debited furniture. It's a principal error. So let me rectify it. Furniture should be rightly debited and purchases is wrongly debited. So I will credit it to purchases. How much is the amount? It's 6,000. Okay. Next one. What is next one? Okay. Next. Credit sale of 760 was wrongly posted as 670 to the customer's account in the sales ledger. Okay. Correct entry what? It was the normal credit sales. So credit sales is correct entry, debtors account debit to sales account. Correct? How much is the amount? It is 760, 760. 760, 760. Correct? No? But what happened in the actual entry? Ayo sir, what happened sir? They have credit sale of 760 was wrongly posted to 670 in customer's account. So very careful, okay? Debtors account ge posting agiradu 760 alla, instead they made it 670. Ayyo, mistakes only they'll do. Okay. Sir, sales ledger, sales also has become 670, no sir? Hey, what did I tell? Again, base assumption. They have spoken about debtors. Sales, they have not told anything. That means it will be posted correctly only. So, two sales, 760. So, your rectification entry becomes account that should be rightly debited is debtors. Account that is rightly debited also is debtors only, but it is a little less. How much it is? It is supposed to be 760, but it is debited only for 670. So, I have to increase it by 90 more. So, debit debtors by 90. 2. Sales high, don't do anything for sales. Sales is already correctly posted. Then what to do? It's a one-sided error. Should be corrected with suspense account 90. Entry will be debtors account debit to suspense account. And one more thing I would like to tell you, small adjustment. Okay, small change I will do. Okay, we had to observe this before. See, we have closed the books with a difference and the following errors were detected subsequently. Andre, it's after trial balance. No. It's after final accounts. Books is closed and then we are rectifying the errors. So it's happening after FA. So if it's happening after FA, how will our accounting entries change? Sir, everything same only, but if there is any nominal account coming anywhere, that will be replaced with P&L adjustment account. Now here see, we have purchase returns. Instead of that, I'll take P&L adjustment. Here discount received is a nominal account. Instead of that, I will use P&L adjustment. Here we have furniture to purchase. In purchase, it's a nominal account. Instead of that, I will use P&L adjustment. Then fourth one, again it's data, its rectification is debtors to suspense. Here we don't have any nominal account. I'll just keep it as it is. So that's one thing we should have considered. So next one is the sales account was undercast by 10,000, being the carryover mistakes in the sales day book. That means your sales account is undercasted. It's posted to the ledger a little less. How much less? 10,000 less. That means increase it now, no? So that means sales is an income increasing credit. So 5. Sales has been undercast, increase it. So sales is an income increasing credit. How much? It's undercast by 10,000. Debit what? Sir, debtors. Hey, they're telling only about sales total. Others will be posted correctly. So I will use suspense account 10,000. But since this is, we are finding out this error after final account. If there is any nominal account, instead of the nominal account, I will use P&L adjustment account. This don't forget this, huh? Very important. Then closing stock was overcasted by 10,000, being a casting error in the schedule or inventory. Prepare rectification entries in the next year. This is also another hint. What has happened? Closing stock was overcasted by 10,000, being casting error in the inventory. So what would have happened? Your closing stock is overcast. When? Last year. So we know that closing stock and profit are directly related. Correct? Now, if closing stock is more, profit will be more. So right now what I have to do? reduce my stock and also reduce my profit, because if closing stock is more, profit will be more. Now reduce closing stock, reduce profit. So what is the entry I will pass? So stock is an asset, reducing credit. So to stock account, okay, and reduce profit. Okay, profit, income, reducing debit. It's a nominal account. I'm using P&L adjustment. It was overcast by how much? It was overcast by 10,000. Correct. Please note that point. Generally, the closing stock and profit are directly proportional. If more the closing stock, more will be the profit. Less the closing stock, less will be the profit. Now what has happened? Since the stock was overcasted, your P&L also will be more. So reduce P&L also, reduce stock also. P&L income reducing debit, stock is an asset reducing credit. Understood? Very good. So let's take another question. ಇನ್ನೇನಿದೆ ಅಷ್ಟೇ ಕಣ್ರಿ, ಅಷ್ಟೇ ಇನ್ಯಾವುದು ನಮ್ಮ ಐಟಮ್ ಇರಲ್ಲ. ಇದು ಡಿಪ್ರಿಸಿಯೇಷನ್. ಓಹೋ, sorry, it is a higher purchase, not depreciation. Okay, we'll do it when that comes. That's all. So let's go to another set. So set it to ಅಲ್ಲಿ ಏನಾರು ಇದೆಯಾ? Which of the following is not a method of charging depreciation? Thinking fund method, there is something like that is there. Sum of years digit method is there. Working hours method and assets life cycle method. I think it should be D. I have not heard it. Okay, these three, and this also makes sense, no? Based on hours. Also we give depreciation. That method is also there. So let's see. First one should be D, correct? No, assets life cycle method. Next, outward invoice issued is a source document for outward invoice. We'll issue whenever we are making sales, correct? No, so it will come in sales book. Okay, source document. So it should be 2B. Okay. Next, what do we have? Which of the following errors is an error of omission? Sale 5,000 written in the purchase journal. This is not error of omission. Wages paid to Sham debited to his account. No, the total of the sales journal has not been posted to sales account. So answer should be C. Correct? No, C. So this, I told no. One, forgetting to record the entry in journal itself. Second, you have recorded it in journal but you have forgot to post it. That will also be considered as error of omission. C. Then what is this? See, everywhere you will be having this PDD. Okay, don't leave this. 31st March 24, debtors and additional bad debts are 8 lakh and 10,000 respectively. See, it's additional bad debts. Aita? If the provision for bad debts is made at 5% on debtors, then the amount of such provision will be. See, debtors as on 24 is 80,000. These are additional bad debts, which is not yet written off. That is what I can understand. So, 8 lakh minus 10,000, right of the bad debts. Now the debtors balance will become 7 lakh 90,000. On this you will maintain 5%. So this comes to 39,500. Correct? No. So answer should be C. So C, fourth one is C. Okay, so these all we have done. So please first write off the additional bad debts. Okay, if there is any bad debts, write off everything. Then on the remaining balance of the debtors only, we calculate provision percentage. Okay, please. On 1st April 2022, which is this first of all? Oh, it's depreciation. Nice, nice. Come on, guys. We have a depreciation question. On 1st April 2022, SOM Limited purchased a machine for 66,000 and spent 5,000 on shipping and forwarding, 7,000 import duty, 1,000 for carriage. All these are what, guys? All these are directly attributable expenses for machine, which should be capitalized, will be treated as capital expenditure and will be added to the cost of the asset. All this brokerage, iron pad, all this is necessary for the asset to become ready to use. It was estimated that the machine will have a scrap value of 5,000 in the end. Useful life is 15. On 1st Jan, repairs and renewals of 3,000 were carried out. So what about repairs and renewals? This expenditure will increase the efficiency of this machinery. No. Repairs are generally made to maintain the efficiency and will not be treated as, and that expenditure, repairs and renewals, normally will not be treated as capital expenditure, but will be treated as revenue expenditure, because it is just maintaining the efficiency of the existing machine. It is not increasing any efficiency of the machine. Clear? All of you? Super. So that will be treated as expense. It will not come in your machinery account also. Entry will be repairs account debit to bank. That's all. It will not come here. Biscuit. On 1st October 2024, this machine was sold for 50,000. Prepare machinery account for 3 years. Okay, they have not told anything about depreciation. If nothing is told with available information, we can find out depreciation using SLM method. So what will be depreciation? Take the total cost. So first of all, when you buy a machinery, asset is increasing. Entry should come in debit side. To bank, 66 plus all other expenses 14. It becomes 80. So total cost is 80,000 minus residual value is 5,000. So useful life is 15 years. So per year depreciation comes to 75 by 15. It comes to 5,000. So at the end of first year, depreciation is 5. Closing balance 75. Next we'll take the balance and come to next year 75. Again next year depreciation 5,000. Close the balance. Again take the balance to the next year. Again next year depreciation wait, because in that year sales has happened. No. What sales happened? On 1st October 2024, the sales has happened. So we have to follow our steps. Step 1, give depreciation till the date of sale. Okay. The year is starting from 1st April 24. Sale happened on 1st October. It comes to 6 months. So per year depreciation is 5,000. So 5,000 into 6 by 12 comes to 2,500. Step 1 done. Depreciation. I normally give depreciation. Step 2, sale proceeds. Sale proceeds should I sold it for how much? I sold it for 50,000. So what should happen? Sales proceeds. Step 2 should come which side? Credit side of machinery account we discussed. No. So here it's actually bank account. Okay, they put it as balance. Mistake. It should be by bank account. The sale proceeds will come 50,000. Next, you'll calculate profit or loss on sale. How to do it? Sale minus carrying amount. Sale amount is 50,000. Minus carrying amount is what? Cost minus depreciation till date. What was cost? Cost was 80. Then you gave first year depreciation. Then you gave second year depreciation. Then you gave depreciation till date of 2.5k. So your carrying amount has come to 70 minus 2.5, 67.5k going to the carrying amount. So 50,000 minus 67,500. So you have a profit or loss. We have a loss of 17,500. I told you loss comes in credit side, whereas profit comes in debit side. So it's a loss. P&L account 17,500. We are done with the machinery account. See, we followed the steps. It was very simple. Easily got 7 marks in the no pocket on my t-shirt, but you would have got 7 marks easily. Yes, sir. Then no. Okay. Next, what question we have? Oh, as usual, we have our rectification. They've given 5 possibilities and they've asked the entries for all the 3 possibilities. Okay, what if it is identified before preparation of trial balance, after preparation of trial balance, and after preparation of final account? We have discussed it very briefly, no? All the 3 cases. So let's see. Let's start. Okay.